evolve on their own. Of and welcome you all to the fourth edition of the Moneycontrol Mutual Fund Summit 2025, presented by HDFC Mutual Fund and powered by Axis Mutual Fund. It's a true pleasure to welcome you all this evening to what has become one of the most anticipated gatherings in the mutual fund industry. As Warren Buffett once said, the best investment you can make is in yourself. The more you learn, the more you earn. And tonight, we come together in that very spirit to learn, to exchange ideas, and to gain insights that empower smarter investing and stronger financial futures. Industries don't evolve on their own. They are built by people with purpose. And today, we are surrounded by those very market leaders, fund managers, distributors, policymakers, and investors, all here to shape the future of mutual funds in India. The Indian mutual fund industry has demonstrated remarkable momentum, delivering a 20% CAGR, compounded annual growth rate, in AUM, asset under management, over the last decade, significantly outpacing the 8% CAGR seen in the US. As of May 2025, the industry's AUM has touched an all-time high of 72.2 lakh crores, with 13.3 lakh crores added in just the last year. It's a clear signal of the industry's growing relevance in India's financial ecosystem. Looking ahead, the mutual fund industry is projected to achieve the $1 trillion AUM milestone by 2030. And this isn't just a number, it's a collective vision for deeper participation, broader inclusion, and long-term wealth creation. From small cap and mid cap strategies to the investment versus consumption debate, Gen Z's growing influence, and the expanding role of SIPs. Tonight, we explore the many forces fueling this $1 trillion dream. Before we proceed, let's take a moment to thank our like-minded partners who've made this evening possible. A heartfelt thanks to our presenting partner, HDFC Mutual Fund, powered by partner Axis Mutual Fund, knowledge partner K Fintech, event partners Motilal Oswal Mutual Fund, Mirae Asset Financial Services, Tata Mutual Fund, and PPFAS Mutual Fund, and associate partner Reliance Industries. Now, to officially open the evening, I invite a thought leader who has consistently championed credible, data-driven storytelling in business journalism. Please join me in welcoming Nalin Mehta, Managing Editor of Moneycontrol and Chief AI Officer, Network 18, for the welcome address. Let's give him a warm round of applause.
Thanks very much, Nandita, and a very good evening to you, ladies and gentlemen. Thanks very much for making the time to come here this evening. The mutual fund industry is at the heart of India's retail investor boom, and I'm delighted to welcome you all to the fourth edition of the Moneycontrol Mutual Fund Summit. At a time when India has just become the world's fourth largest economy, this year's summit theme of the $1 trillion opportunity seeks to unlock solutions on how to scale up this industry from its current size of about $864 billion of assets under management to the next big milestone and its next phase of growth. With India looking to reach its goal of Viksit Bharat by 2047, the mutual fund industry's role is critical for wealth creation, for financial democratization, and for investor consciousness. The numbers show how quickly Bharat's mutual fund industry has transformed India's personal finance story, turning us into a global mutual fund powerhouse. For context, with over 72 lakh crores of assets under management today, compared to 12 lakh crores in 2015, the mutual fund industry has grown at a CAGR of 20% in the last 10 years, as Nandita also pointed out, actually 24% in the last 5 years, in comparison to, say, the US market, which grew by 8% in the last 10 years for mutual funds. We had a record 26,688 crore worth of SIPs coming in last month in May 2025. We now have 9 crore SIP accounts with over 5.4 crore investors, which is 19% more than last year. The geography of India's investing is changing drastically, with just about one-fifth of assets under management now coming from cities beyond the Big 30, which is tier 2 and tier 3 towns. So going beyond the traditional centers, we're also seeing huge growth of SIPs from states like Telangana, from states like Uttar Pradesh, and from Haryana. These are all non-traditional centers of personal finance and investing. These numbers are a resounding vote of confidence in the industry. And yet, there are big challenges to reflect on. For example, the investor base may have hugely expanded, but only about 5% of Indians currently invest in mutual funds, compared to, say, around 50% of Americans. So as a new generation of Indians become first-time investors and the industry scales up, there are some key issues to reflect upon. And how do we build more trust in the system? How do we use technology to increase access without compromising on transparency? And how do we increase investor literacy so that every Indian understands the value of compounding, of risk, and of course, of patience? So our panels today, throughout this evening, explore all of these themes and much more as we deliberate a blueprint for the $1 trillion mutual fund milestone. In the room today, we have some of the industry's best minds, its best fund managers, investors, distributors, and policymakers to deliberate on what next and how to unlock the next phase of investor growth for Bharat, with mutual funds becoming a broader tool for wealth creation and financial security for Indian households. As India's leading business and markets news platform, we at Moneycontrol are delighted to have put together this platform for the industry, and I hope we spark off meaningful conversations, new connections, novel solutions, and long-term engagements that matter for Bharat. Thank you very much, and let's have a great evening.
Thank you, Nalin, for setting the tone for the evening. With that, let's dive into our first panel discussion of the evening. Blueprint for a $1 trillion AUM, sustaining investor interest, delivering value. We've all seen how fast the mutual fund industry is growing. But with nearly half of the assets linked to the stock market, the big question is, how do we keep that momentum going in a volatile world? What does it take to keep investors engaged, simplify choices, and still deliver real value? In this discussion, we'll explore how the industry can expand and simplify its product canvas, craft investor first strategies, strengthen education, and most importantly, build lasting trust. To explore the blueprint for a $1 trillion AUM, please put your hands together for N. Mahalakshmi, who will be moderating this session, and also our distinguished panelists, Navneet Munot, MD and CEO, HDFC Asset Management, Radhika Gupta, MD and CEO, Edelweiss Mutual Fund, Kalpen Parekh, MD and CEO, DSP Mutual Fund, and DP Singh, Deputy MD and Joint CEO, SBI Mutual Fund. Also joining us is Nilesh Shah, MD, Kotak Mahindra AMC. ML, the stage is all yours.
Thank you so much, Nandita. It's an absolute delight to sort of kickstart this event with this wonderful panel. I've been a financial journalist for about 25 years now, and many of the people out here have invested all their entire professional life in building this this industry that we definitely did not think 25 years ago that could be this sizable, and retail investors would take to this as their primary investment vehicle of choice. So thank you so much, all of you, for joining this. This is especially a meaningful conversation because we are approaching this magical number. Of course, people have already, Kalpen and Radhika have already told me this is, $1 trillion to abhi pahunch hi gaye hain. Of course, pahunch gaye hain. And hoping that the markets are also generous. It'll be here very soon. But what is the next trillion going to look like? What are some of the opportunities? What are some of the course corrections that we need to sort of look at from here on? So I have in my mind what I think as three constructive points to discuss, and 2 points which are widely debated, I know, within the industry, in the ecosystem. So we'll get some, conversation around that. But first thing, let me start with Kalpin because he's been most vocal and consistent in this messaging that over the last 5 years, and this is perhaps the biggest challenge, that over the past 5 years, our returns in equity markets have been double the long-term average. And this is, uh, you may say it many times, and I think a lot of people are saying it many times, but still, एक पाकिस्तानी poet है जो बोलता है कि दूसरों के कहे से कौन सुनता है, सबको एक हादसा जरूरी है. So investors maybe to drill this, by messaging is easier said than done. So how do we get this message across that you've earned twice the return that is possible in this market? Perhaps a little more is possible at half the volatility, as you put it.
You start with tough questions to me, so I'll take the bouncer. Yeah, of course, we've been fortunate that disciplined investors earned that 2x return. And what we always tell investors that why did you earn that 2x return? Because you invested when past 5-year returns were half of the long-term returns. So returns are cyclical, markets fluctuate is the only truth. And all of us collectively have been messaging. In fact, recent ad campaigns by even AMFI have been around highlighting volatility and the need to think long-term. And as you rightly said, universal truth या सत्य एक ही है, उसको 1000 बार अलग-अलग तरह से repeat करना है. I will say it will have effect of 1 unit. Nilesh Bhai will say it will have effect of 100 units, and with Radhika it might be 1000 units. But we will keep saying the same things again and again. And I think another important transition or maybe migration we need to do is probably talk about rolling returns more often. Talk about what can be the best, what are the worst case returns if you had invested for 10 years, and what are median returns. Right. So that's one way in which education can be done with data points also, apart from the fact that typically the way to educate investors to invest in Indian equities has been around the growth story of India and the fact that we are a democratic country with growth. So that's using the dimension of future growth, and at the same time we have 30-year history now. And in this 30-year history, we have had cycles of 5 years of zero returns, 10 years of moderate returns. So the more collectively we make those efforts to use factual data, because our industry is also about maths and data and facts. So this balance can help investors. So that direction, if we move towards leveraging more of rolling returns as a communication point versus lowest point to highest point, is one good way to do it. And the second thing I think, which I'm happy about is, when both of us were in a company called Prudential ICICI, we had this fund called Equity and Derivative Fund, which has now been repositioned. That category is now a dynamic asset allocation fund or balance advantage fund. So beautifully, in the last 5-10 years, the industry has grown that asset class extensively. So that asset class auto-adjusts across equity or bonds, depending on valuations and cycles. So in the last 5 years, markets have given a lot of lessons of corrections, though they have been short-lived. So the pain has been temporary. The volatility has been lesser and for a shorter period of time. But these funds have cushioned it a lot more. And a lot of education done around the fact that asset allocation will help you stay put and reduce volatility. These are two things I think we need to continue to communicate, and that is our responsibility. If we just play that role, I think we will continue this growth path.
I like your first point, especially Navneet. As an industry, are we prepared to mutual funds सही के लिए एक disclaimer चाहिए कि क्या aspect सही है, क्या सही नहीं है, because the moment you put rolling return, you're also putting emphasis on the downside. And a lot of people would, within the industry, would argue, यार अभी तो start हुआ, अभी से तुम disclaimer करना शुरू हो रहे हो.
The difference between our industry and any other product is that there is tremendous amount of emphasis on the disclaimer. If you do a survey across the country, what do you know about the mutual fund? Of course, now after 10 years of hard work by everybody in AMFI, they know one thing, mutual fund sahi hai. But if you ask them, और क्या, तो उनको एक ही याद है. Mutual funds are subject to market risk. Please read the offer document carefully. I think 1 billion people can recite that. exactly in the same manner as we put it. I don't think there is any other
Can you hold your
industry
mic
where
right?
the disclosures are of the standard that we have. We take huge pride at the same time with a lot of humility that if you compare us with even the developed markets, I think our disclosures are a lot more robust and a lot more frequent in terms of like an investor constantly know what's happening in their portfolio. And that's where like a lot of credit to SEBI and MFI and SEBI. We work together. Mr. Amarjit Singh is here. We work under his guidance. So we take a lot of pride
No,
in
I,
that. So
I, I
but
totally.
let me complete. We are also saying that this campaign started in 2017 and I always call this, it's something like persuasion. I'm sure you are one of the most well-read journalists in India. Uh, this persuasion of Rolf Dobelli. And I keep thinking this is like what we have done in mutual fund Sahi Hai is a persuasion. You just kind of like create a curiosity around it that you've been investing like this for not decades, but hundreds of years. Indians have said we are great savers, but we need to become great investors. You have been investing in a certain manner, but I think you need to look at another product. So what we did was kind of as an industry as a whole, and then it's for all of us together and with the help of advisors and distributors and the people like you, then you do the persuasion, like what is right for you. You are absolutely right. And within the MFI board and our own financial literacy committee, we have been discussing that. Now we need to move to the next level from mutual funds. Sahi hai. We have created that awareness, which was very critical. It's got us like a couple of million more investors into the fold. The next level has to be क्या सही है, कैसे सही है, क्यों सही है. We have been making a lot of efforts over the last couple of years or more so in last couple of quarters, thanks to again a lot of partnerships with people like you. But there's a lot more that I think you are going to see from MFI over the next several years.
I love that word, by the way, persuasion, Robert Cialdini's word, and it's a wonderful concept. DP sir, your thoughts, because your reach is the highest, and to send this message across that mutual fund sahi has, has been done. How do you make people aware of the risk, the fact that there is volatility, the fact that returns are not going to be as good, and for a lot of small SIP folks that you might be attracting, it is not just about last 5 years. The fact that equities are a volatile asset class itself may be a new concept.
First thing first, I absolutely echo what Navneet has said. The pursuance and the whole industry is working is something which is very important. And recently, we in our fund house we have come out with a website, mutualfundqsahiya.com. Okay, that is there on this thing, and we say mfqsahiya.com. And kya sahi hai, kyun sahi hai, exactly what you are saying, that is more important. And at the industry level also we are doing it, at individual level we are doing it. But this is extremely important going forward when people have seen such a good return over the last 5 years, 10 years. So it's our responsibility to take the message along at every nook and corner of the country. Even we have published under the investor education do's and don'ts for the investors. We are publishing that. We are putting the posters all across the country in distributors' office. Of course, when we discuss in MFI board meeting and all those things, it's not only the industry, I mean, industry body who has to do it. Individual fund houses also have to do it. And we feel that especially when we talk about SBA branches, which are there, so we feel that that's one thing where we have to put posters. We have put thousands and lakhs of posters, do's and don'ts for the investors. We have put the posters in the branches so that there is no mis-selling, there's no concept of see any misinformation, especially going forward, what all we can do. So those are some of the subjects we all as an industry as well as individual fund housing. We are doing it. This is extremely important. And actually when your auditor was talking about the 2015, the whole industry was 12 lakh crores and today it is 72 lakh crores. I was just wondering that today we are 12 lakh crores as a fund house only, and when the industry for 10 years ago. So I was thinking, is it possible that in 10 years again, after 10 years, will be 72 lakh crores or not? So that is the kind of growth we can see it. And we're looking for a period when today we are talking about deposit to AUM to deposit ratio. But I think next 5 years, 10 years, it will be other way around. People will be talking deposit to AUM ratio.
Right.
That's what we are looking for now.
Right, true. So quickly moving on to a slightly larger canvas. 50% of the total mutual fund in AUM roughly is tied to equities, right? Now, because this money is gushing fast, of course, I don't know whether we should say fortunately, unfortunately, the SIP flows, total number accretion is going down. But otherwise, because of this flows, we've talked about this, there is this bubble that gets created, especially in segments that are, momentum driven and so on. And mutual fund industry as such has really proven its worth in terms of transparency, like Navneet pointed out, disclosure norms, it's very cost efficient, all the virtues of, liquidity, all of that is sorted. So we have a great framework. What do you think can be done or should be done to take the product canvas beyond equity and debt? Because the essence of investing safely is about diversification.
So thank you, Mahalakshmi, for having me here. And DP भाई, तू ये 72 लाख की बात मत कर. ये $1 trillion तो हमने तेरे लिए ही छोड़ा है. तो तू 88 लाख करोड़ कर देना. बाकी फिर हम लोग थोड़ा काम कर लेंगे. Now, how do we expand industry? So first of all, I have to convince all these ladies and gentlemen sitting over here that if you keep currency notes at home, it will not grow. Collectively, they have 35 lakh crore plus currency notes at home. The total amount invested in mutual fund, excluding mark to market, will be less than that. And our returns, as Kalpen mentioned, is 12, 15, 16, 20%, whichever number you like. तो मुझे तो इन लोगों को कन्विंस करना है कि भैया घर पे पैसा रखेंगे, उसके जार्ड नहीं उगेंगे, म्यूचुअल फंड में डाल दो, थोड़ा ऊपर नीचे होगा बट पैसा बनेगा. इट्स सच अ डिफिकल्ट टास्क. रिटर्न पे रिटर्न दे रहे हैं इतने सालों से, बट ये लोग पैसा रिलीज नहीं करते. सेकंड, ऐसा नहीं है कि इंडियन इन्वेस्टर्स आर लाइक दिस. I can go to Japan and show them the return they have made in Indian equity and the return they are making in their equity or their fixed income. Undoubtedly, they should be putting more money over here. So one is to expand the investor base. Today, there are 30 crore plus vehicle owners in India. The number of investors in mutual fund is 5.5 crore. Ideally, every vehicle owner should be a mutual fund investor. So I still have to grow 6 times more. But convince karna baki hai, Mr. Mendes. The second thing is in terms of product. Clearly, as of today, we have products across equity, fixed income, and precious metal. But can we expand this into many other products? Thanks to SEBI, we are slowly and steadily moving into that. So REIT InvIT is coming, performing credit in AIF is coming. But any product which is bordering on the debt side will require rule of law. Return of principal is more important than return on principal. And in India, if you are stuck in ILFS, you never know when the principal will get returned. So we need rule of law so that we can create structure between debt to equity, between lower risk to higher risk. And hopefully over a period of time, we will have enough product to meet different risk return requirement of investors. The third will be geographical expansion. Today, whether we like it or not, we are still mainly urban India phenomena. Undoubtedly, semi-urban and rural India, we have penetrated, but there is far bigger scope. So how do we create channel whereby we can go to different geography? So either we'll have to expand investor base, or we'll have to expand geographies, and we'll have to expand product. Combination of that three will ensure that whatever DP by creates, will also be able to create as an industry.
No, my question was slightly different. Of course, you're talking about investor growth and growing the size of the industry, getting more investors invested in the mutual. I'm asking that right now, this framework has only two broad asset classes, which is equity and debt. There is real estate, there is commodities, there is a lot more which offers diversification. I'm asking this question because in India, we have always narrated this line that, in the long term, and I think I don't know if it's narrated as often in other countries, we don't know, that equities are the best asset class over long terms. And it's not necessarily true, because the champion of this line is only the United States. You look at Japan, 20 years, no return. Last 10 years, no return in China. Brazil, long periods, no return. Russia, no return. So there are several examples in the world to show that long-term equities need not be the best asset class. In many countries in Europe, debt has been maybe a couple of notches below. Real estate has been on par or better. So how do we take this fantastic, efficient framework to cover other asset classes to be able to give a safer, a better milieu of products to investors?
So we have on precious metal, gold and silver products. Could I be going into other commodities? But we need rule of law there for me to participate. Otherwise, I'll end up creating national spot exchange equivalent phenomena. The commodity markets, either the arbitrage is very, very low, the returns are poor, or there is no security. In terms of real estate, again, do I have ability to manage REIT? Answer is yes. And we have gone to SEBI to increase exposure to REIT, InvIT, and they are actively considering it. But can I be running a real estate project? To a builder, it is 20, 30, 40% IRR. But we have seen experience of all the foreign capital which came into real estate investment over last 20 years. They have barely delivered better return than savings bank account. So one, we need rule of law so that institutional capital can flow. We need to attract talent. And then we need regulation which will support that kind of product creation. Can it all happen tomorrow? Answer is no. Will it happen over next 5, 6, 7, 10 years? Answer is yes.
Sure. Radhika, you are a relatively young fund house, and usually all these, things really, new ideas really come from the periphery, the newer, younger players, and they sort of come and disrupt and create a whole new game. How geared up do you think are the, relatively smaller, younger players in the mutual fund industry to drive something like this?
I'll answer that, and thank you for having me here. But, newer fund houses are often called innovative, etc. And this word in the context of innovation, and I'll also just plug into what Nilesh Bhai said, has always thoda sa scared me. India has today a lot of asset classes. You have equity, you have debt, you have gold, you have silver. You want to do bronze arbitrage, you can sit and go do that. You have SME, IPO. You have actually no shortage of asset classes today in India. Net, you still have 5 crore investors in the country. I genuinely believe our job is market expansion. Now, the other thing you have to realize is India is a very nuanced consumer market. You have treasuries and family offices with 1,000 crore corpus who can happily, who have a 10, 20-year risk appetite, who can absolutely put money into REIT and all this stuff. And you have people who are making their first 100 rupee SIP who don't even realize कि अगर मैं equity में पैसा डालूंगा मेरा return कितना होना चाहिए. That is the cross spectrum of consumer that we deal with. And I think you have to build you have to build products for consumers. So today in India, I think for 90% of consumers, actually equity and debt is just right. It is dal and chawal for a population that is not very, very nourished. And why should you confuse anybody with anything else? Dal chawal for the next 10, 20 years is actually good enough. For the next bracket of investors, by the way, SEBI has created something called specialized investment funds. Some of us have got licenses and are launching products. I'm sure many of them will. So for a 10 lakh consumer, we are giving dal chawal with some tadka, some ability to do derivatives. For a 1 crore consumer, SEBI has created AIFs where you have venture capital funds, SME, SME, private credit, you have everything. So for different life stages, we are actually building diets. So I think, we have to be a little more nuanced about that. As far as innovation, I think innovation in any industry has come from outside, but I think innovation has to be deeply purposeful. I'll speak about two sensible pieces of innovation, one that came from our fund house and one from another one. The whole balanced advantage fund category is not very, very complicated. But I think it's an incredible innovation that came from a fund house that catered to the need of an Indian consumer. I think Bharat Bond ETF, in the way it's scaled, the whole concept of target maturity fund, FD in a tax efficient format is very sensible innovation. And the third most sensible innovation that has outclips the word mutual fund is what? It's not even a product. It's called SIP. It's a feature. It caters to the savings need of Indians. So we are innovative, but we are innovative with a purpose.
Sure. So my question was only because of the sense of risk perception related to equities, which I don't know if all of you agree. Because
But you know,
just the
one thing,
global
if I can
markets.
just add thing, I don't know if to change the, at least when someone invests in equity, they understand what they're investing in. They see the Indian economy. They see the growth of companies. They see companies listing on the exchanges. I don't know if by buying an ETF that Nilesh Bhai is long oil and short copper, you're actually creating a product that is better for the consumer.
By the way, till few years back, Mahalakshmi, in any of these events, and both Nilesh Bhai and I, we were the bond fund manager. The biggest criticism of our industry were two. And Mr. Singh is here. He has seen our journey over the years, and a lot of time we'll have somebody senior from SEBI coming in, a lot of other people like you. And the biggest criticism were two. Number one, your industry does not have as much individual participation. Most of your money is institutional. Number two, your industry thrives on fixed income money. You guys don't have still the equity penetration. This is only in last 6-7 years where we have seen equity flows of this order. Our SIP book, after 20-30 years of hard work, only reached 4,000 crores in 2017 first time, which has become now 26,600. But I think this is just beginning, because if you look at the overall household balance sheet in India, the equity allocation is still less than 5%. Equity allocation is still less than 5%. So our worry should be that how are people going to secure their retirement if the participation in the growth of the country is that less by a large number of people? And a Viksit Bharat, unless it is equitable and inclusive, then it won't really be Viksit. And that's where the role of the capital market and providing that growth opportunity to at the population scale. The other thing I'll mention, what just to add to what Radhika and Nilesh Pai. So if you look at our growth, so we have become $800+ billion, will be $1 trillion for sure. And just to put this number in perspective, this is where US was in 1988 or so, you can check. And by the end of 2000, they were $5 trillion. And you can see a lot of other parallels between what happened in US and what's happening in India. Now, I won't get into that detail. But I think your point is very valid, that and the reason for our success from 100 billion to 800, the things that have helped us, apart from the track record that Kalpin talked about, apart from transparency, apart from the training effort that we have put in place, apart from technology, the other way to look at the macro factors is basically the formalization of the economy. It's the digitalization of the economy. It's digitalization of finance. It's financialization of savings. Some of these are talked about quite a bit. The thing which is not talked about, which you will see in next 20-30 years, is the financialization of assets, because that's where the large part of the investments are. When I see a Blackstone CEO coming here, a Brookfield CEO coming here and saying that we'll double our investments from 50 billion to 100 billion dollars in next couple of years, and I keep thinking that why are roads, transmission lines, data centers, commercial real estate, so on and so forth, is owned by teachers in Quebec, or let's say the firemen in Australia? Why are Indians not owning it? I think it is going to happen. The fractionalization of assets, and I think mutual fund is a wonderful vehicle. We have shown this over the last several decades. I think over a period of time, we will have a role to play. As the REITs markets, InvITs market develop, I think our ability to provide that solution to investors, I would say stable returns by owning a hard physical asset in a country of like, our kind in terms of rule of law, in terms of policy and all of those things would be phenomenal over the next several decades. It's just a matter of time.
Fair enough. Now, on that note, I'll quickly get into a territory which is highly debated, DP sir. There is this categorization that is allowed by SEBI in both equity and debt, 16 categories, equity, hybrid together, and 16 category of funds within debt. And despite that, we have about 40, 44, I don't know what's the exact number now of AMCs. We have about 1,880 fund schemes. Now, on any given day, the daily average number of stocks traded on NSE is about 200, 2,000 to 2,200. Now, the problem of selecting a fund seems to be far bigger than the problem of selecting stocks. Now, on one hand, we are saying investor awareness and literacy and stuff like that, and we are making this whole thing so complicated. And it also sounds like a hypocrisy of sorts that you have categories, and yet there is no cap on the number of mutual fund schemes a asset management company can have.
See, we have got only 50 fund houses. And as SEBI is making it easier to more and more fund houses to come, I think 1,800 can be 3,000 also. That's one thing, because categories, they are large cap stocks. As you said, only 2,000 stocks. Yes, 2,000 stocks, but if you go through the mutual fund portfolios, I don't think all fund houses put together will be more than 600, 700 stocks. Okay, I think universe is common, right? 400, when anybody will be having a universe of 200, 300 to say 400 to 500. But 700, 800 will be the total stocks which will be there. So having said so,
तो आप क्या बोल रहे हैं मतलब कि लोग स्टॉक ही खरीद रहे हैं
I'm coming to that. I'm coming to that. See, when the categorization was done, it was done very, very, with a lot of discussions, lot of consultations with the people. And the industry has grown so much. As you were saying, today our equity, AUM is more than 2.5 times than what the whole industry was 10 years ago. So when the funds are going so much, and if you look at the in other countries and in developed countries also, every fund house will have so many schemes. Now they are having so many ETFs, so many schemes. But investors have also evolved, and see, today number of schemes are more because of so many thematic funds have come, so many sectoral funds have come. Whenever there's a bull run in the market, people go to the micro sectors and some schemes like defense sector, this sector, that sector. So number of schemes have gone up. But if you look at it, the overall all put together, the maximum AUM, 70 to 80% AUM will be 5 or 6 categories. So that is, we have to see, and that it's not that the whole AUM is in so many sectors. If you talk large cap, mid cap, large and mid cap category, focus category, and small cap, if you all put together, I think the 80% of the AUMs will go there.
No, fair point. But from an investor's perspective, the problem of selection, is that not a real problem? Is that not
no? Yeah. Do you order from Swiggy, Zomato? Never.
I do. Why?
I mean, there are like
thousands
of items. I know that. So this morning my wife is traveling, and I was in a hurry to go to office, and I ordered like a chayoska chai plus the poha because I only needed that. It doesn't matter like where lots of other things might have been there, and they will always pop up like 7 other things. If like it was a little more complicated other than that, let's say the same thing about the medicines, right? But then I'll have an advisor, just like a doctor, I'll go to them and they will prescribe me.
You are trivializing the point. I mean, you can't compare financial
investments
investments of a lifetime with ordering on Swiggy, Navneet.
No, all I'm saying is it depends on the investor, because if there are 50 AMCs, you'll have 50 large cap fund, right? This has only happened in India. And again, maybe I won't get tired like praising SEBI for what they have done. I just hope some stage ICI in US, Investment Company Institute, does a paper that there is so much we can learn from India. There's no country where you have this kind of classification. All of us can only have one large cap, can have one flexi cap, can have whatever one. And within that, what is large cap, top 100, whatever, next 50. You go to US, somebody will say mid cap 5 billion, somebody will say mid cap 20 billion. There is no standardization. Everybody has got S&P 500. And I keep thinking, Cathy Wood's fund versus somebody else's fund, somebody value, somebody invest. only in REITs and whatever. In SEBI, like you have a proper benchmark. So I think that way, with the classification, with the uniform benchmarks and the amount of information and all, I don't think like we have reached a stage where people are spoiled for choice unless others have a different view.
But are you, Radhika, truly worried about, narrow thematic funds like, tourism fund, defense fund, EV fund, and, we also take refuge in the fact that, passives are no risk. So what are your thoughts?
Okay, I have a related but slightly different view. And this discussion on too many categories, too many funds, ये काफी हो चुका है. It is also important to be a little solution oriented. Now we've had a lot of food analogies, but it's my son's birthday today, and he plays with lots of little Lego pieces. I think as an industry, we have created a lot of funds, a lot of categories. All the individual pieces of Lego are there. We've done mutual fund sahi hai, we've established trust. I think what we perhaps now need to do, and I learned this writing our book, is explain kaun sa mutual fund kaise sahi hai. I think step 2 of mutual fund sahi hai is kaun sa mutual fund kaise sahi hai. For instance, if we have 45 categories of equity funds, to DP's point, there is a core category of funds. And maybe as an industry, we need to now talk about these are the Lego pieces. Here are recipe books or here are guidebooks on how you put them together. This is your core category of funds. Yes, there are 30 thematic funds, including tourism fund and future of transport fund, but these are all satellite category of funds. These are gardens. They're not the main Lego blocks. We attempted to do this in Mango Millionaire. We actually attempted, and it was so difficult. The hardest chapter I wrote in a book on personal finance was the chapter on mutual funds, because it was very, very hard to try and break down what was core and essential to everybody and what was satellite and not essential. So I think perhaps now we need to talk about how to build with the Lego pieces.
Okay, fantastic point, and I have a point related to that, which is, now we have this special investment fund category, which is over 10 lakh, right? Now, because I'm presuming that everybody is on the same page with the fact that, narrow thematic funds are essentially should be seen as high risk funds and should be well understood. It's not like for a mass market product. Why not put those satellites into this SIF category? Just because they're plain vanilla, don't use derivatives, doesn't make them less risky. So why should they be under this, mutual fund category at all? They should be in SIF category. What are your thoughts?
I was just looking at chair there. Amarjit Bhai is there.
Yeah.
Whatever he says, we'll do it.
What are your thoughts, Kalpit?
I think
अमरजीत भाई
Sir,
जब
sir,
आप बाहर गए
the
थे तो
question-
इन्होंने पूछा कि थीमेटिक फंड्स रिस्की फंड्स है उसको आप एसआईएफ में क्यों नहीं डालते. मैंने बोला जो साहब बोलेंगे हम करेंगे.
Yeah, I think we've moved from few funds to plenty of funds, and in evolution, it's happened. Personally, my view is there has to be a slightly better nuance, better balance, and we have to bring in better responsibility of also launching thematic funds with guardrails, even timing them, because many times we also know that we as human beings mistime our investments by buying the theme at the wrong time. So at least we found the middle path to say that, and I'll tell you why. Like ideally, I would love to do what PPFA has done, just one fund and build very large. But our investors have different choices, different levels of understandings, needs at different points in time. So how do we think of that balance? That bring thematic funds. So we try to have this very crude, intuitive way. Will we put our own money in that fund when we do an NFO of a thematic fund? If the answer is yes, we are happy to launch that. If the answer is no, we'll not launch that. At times when returns are very high. We had, like I remember at some point in time, our natural resources fund had 40% CAGR, and it was investing in energy and metal stocks. So we stopped taking money. On our website, we put a huge disclaimer in black and red saying that, this is thematic, not suitable, take appropriate advice. So I think choice sometimes becomes confusing, but there are ways to solve by educating better and by transparently highlighting what could be the risk. But at low cycles, sometimes some of these thematic funds can actually deliver very superior return for a more sophisticated investor. And this is a good, interesting point you've said, that could they be a part of SIF? Maybe it's a good thought to debate and evaluate.
But just one point, taking market call is not as easy. नवनीत भाई ने डिफेंस फंड लॉन्च किया, पैसा ज्यादा आ गया तो उन्होंने सब्सक्रिप्शन बंद कर दिया, एसआईपी कर दी। मैं सोचा नवनीत तो बहुत स्मार्ट आदमी है, अगर वो बोलता है डिफेंस एक्सपेंसिव है मत लॉन्च करो। नाउ आई एम रिग्रेटिंग, इट इज द बेस्ट परफॉर्मिंग फंड। तो मार्केट कॉल लेना उतना इजी नहीं है।
Even the SIPs are closed for over a year now. It's probably the only open-ended fund where you cannot put any money, even in the form of SIP, for last 1 year. I think all of us have that sense of responsibility on us.
No question about that. So that's all we have time for. So we'll have to wrap it up. Thank you so much, the lady and gentlemen, for this.
Thank you, everyone, for such an insightful, engaging, and interesting discussion. Well, now it's time for a very special segment, a keynote address that reflects the regulatory vision shaping the future of India's mutual fund industry. In a fast growing space like this, it's not just about scale, it's also about growing the right way, balancing innovation with investor protection, and speed with transparency is key to building lasting trust. As mutual funds become the preferred savings choice for millions, the regulator's role is more critical than ever. But so is fostering self regulation and an investor first culture, from fair dealing practices to suitable product design. To share insights on where we stand today and the road ahead, please welcome Amarjeet Singh, whole time member, SEBI. Let's give him a big round of applause. Good afternoon, sir.
Yeah, good evening. It's indeed a pleasure to be here. In fact, I thought Mahalakshmi would allow a couple of questions to the panel and I would ask a question, but that opportunity was not there. So, yeah, I know. So the question that I wanted to ask was, I'm digressing from what I have to speak. So see, as a regulator in India, you can see my brain in two parts. One part relates to development of the market, and one is very happy to see the growth. And one part is that of a regulator, which worries, and we are paid to worry, we are paid to spoil the party, if I can say, or at least caution the people that, look, we are trained to think more in terms of risks. So the question I had in mind was that while we are growing at a fantastic speed, and it's a phenomenal growth, it's a huge success story, and there was a discussion around there's a need to expand more. There's a huge potential to get more money into the mutual fund category. What worries me is that, not a worry, I mean, what we need to be watchful about is, do you have enough investment opportunities? Do you have enough, asset classes to invest in? Is too much money chasing too few good opportunities? So there are no easy answers to it. Thankfully, we seem to have a good primary market, good pipeline of IPOs coming in and so on. But I guess the speed at which money is coming in, we'll also have to work. And in that sense, mutual funds also have a stake in ensuring that there are more investment opportunities in the market where, money can be invested in a very productive manner. Anyway, I think let me come to my presentation. So in fact, when Mahalakshmi reached out to me, that I should come for this event this year also. So I was a little reluctant. I said, look, I don't have much to tell you all. You guys know everything, and what value can I add? But then, yeah, we were discussing and we said, okay, as a regulator, while we celebrate the growth story, I could maybe talk about uh, growing the right way. And what is that right way in terms of growing? Basically, just putting a word of caution here and there. And also, I've been personally, and Navneet knows about it, fascinated about the discussion on culture and ethics. So, and I feel that part is often under discussed in our ecosystem, while we definitely talk about the growth story, success story, and so on. But what is the, you know, uh, role, a good uh, culture and ethical framework in the industry? Uh, how, if we strengthen that, we would probably be going the right way. That's in a nutshell what I wanted to talk about today. So let me just move on. So what I would cover is the growth story, which you all are familiar with. By the way, on the growth story, again, when I joined SEBI, that was 30 years, more than 30 years ago. So that time, everything was very new for all of us in the system. And one vision that we had even at that point of time was, how do we create equity culture in the country? And we had some examples of well-developed markets. Uh, and actually two, I would say, two routes that we very consciously chose at that point of time was, we'll encourage individual investors to come to the market through mutual funds. And we'll also encourage individual investors to participate in the IPO market so that they get a sense of how the markets work, what is the prospectus, how do you invest, and so on. Uh, that caption of your summit today, that reaching $1 trillion dream, it was actually a dream. It was a very distant dream for us at that point of time. And by that point of time, even years later, we had not thought of such numbers. So it's very gratifying for me professionally and personally to see that vision is getting fructified in terms of when I see the reach, the depth our market has achieved in the recent years, the way mutual fund industry has grown is very gratifying. And I'm happy it is happening before I superannuate from SEBI. So in some sense, it's good to see how, and also let me also mention that uh, we are one of the unique markets where regulators have very closely worked, especially in this segment. We worked very closely with MFI to chart out the growth path of the industry. So, as I said, growth story is known, but I'll show you some slides on that. Growing the right and responsible way. There are many, many dimensions to it, but in the interest of time, I'll talk only about what is the context in which growing the right and responsible way becomes very important. And that context is increasing democratization of the market. And I'll talk a little bit about that. Then the one important theme was how we can focus on strengthening ethical behavior in the industry by focusing on culture and ethics issues. And also want to touch upon the way we work with MFI and how we can make it even better in terms of outcome-based, collaborative regulation, and some takeaways in the end. So the growth story, 72 lakh crore AUM in May 2025, which used to be 8.25 in 2014. I mean, figures speak for themselves. I don't have to say much. Nine-fold increase in a period of 11 years, which is fantastic. So this is, a snapshot of the journey so far. roughly about 10 years ago, 2015, 16, 14, that period, you had 810 schemes. Of course, as you rightly pointed out, there's too much to handle for investors, perhaps, and we are looking at that. 3,000 crore SIP inflows, which are today almost $3 billion, 26,688. So that was what I was referring to. So much money coming in, and all sorts of negative news very easily or very quickly gets factored in, and there's no stoppage there, which is good. I'm not saying it should not happen. It's good. We need more and more people to come and participate in the market. But we need to also look at expanding the investment opportunities. Share of B30 to total AUM from 9% to 18%. Share of retail to total AUM, again, 23% to 28%. Number of distributors has gone up from 70,000 to 2 lakhs. And number of folios also today is 23 crores odd, which used to be 4 crores. What are the key drivers? Key drivers are use of technology, onboarding, transacting, and customer service. Buoyant markets, of course. Regulatory reforms, and I'll talk about that, and a strong focus on investor education. Another important data point here, this is flow of financial assets of Indian households. So in terms of the flow in 2013, the deposits, the bank deposits, NBFCs and other deposits, out of 100 rupees, 57 rupees would go to deposits, which has now come down to 37.2. Mind you, it is the flow, it is not the distribution. And look at the mutual funds, 0.8, and now it is 6.1. Again, there's a tremendous potential. There's a lot of runway for this number to grow. Now let's talk about the next segment of my presentation, growing the right and responsible way. What is the context? So growing the right and responsible way becomes very important when we as a regulator are focusing on increasing democratization of the market. More and more people are coming in, they are, trusting mutual funds with their money, and that trust is very important, and that should not get disturbed. And I wanted to take you through how, and this is again unique to us, how as a regulator, as a part of our developmental function, how we have very consciously worked towards the growth of this segment of the securities market. So we started with reservation of shares for mutual funds in IPOs, which has continued till date. We created certain percentage for them as a part of anchor investor category. And also in public, we created certain reservations for mutual funds. We introduced B15 incentives in 2012, B30 in 2018. Micro SIP is the latest edition, and I guess we need to do more here. This 250 rupees SIP. And I don't like to call it choti SIP. I hear that term often, but I believe we should not, calling it choti, we should not belittle it. It's very important segment of our target savers. So micro SIP, 885 registrations. I believe we can do much more here, and I hope we'll see more traction. Investor education by AMC, setting aside of 2 bips. Education by AMFI, SEBI, cap on total expense ratio. A very closely regulated market to protect the interest of investors in mutual funds. All this has actually led to increasing democratization of the market. What are the key underpinnings of responsible growth? It's very simple, and we hear these terms very often: trust, transparency, and accountability. If we have these 3 things in place, this will lead to responsible growth, which will further lead to more democratization of the market. I had a meeting, very interesting meeting with some distributors recently, and one of the distributors told me her story as to how she got, and I'm sure you have many more stories to tell, but this is just one example. So she told me, and I was quite impressed. I said, why don't you share this? This could be a case study sort of thing. Why don't you share the story with me? So she sent me a two-pager on this. So she came across this very low-skilled worker who used to go to people's houses, house to house, and he was basically a massage person. He'll go and do massage of the people. And this distributor was actually visiting the client where this massage fellow was there, and he saw her advising the client, and then he reached out to her separately outside the house. Can you help me also? And she said, yes, why don't you start a SIP? And he started a SIP. He was a resident of slum area. He started 3 SIPs of 1,000 in 2007, which I'm sure he increased, added more to it. He also invested small lump sum savings every 3 to 6 months. In a nutshell, what he invested since 2007 was 53.4 lakhs, not a small amount, but I'm sure it grew over time. Current value is 2 crores, unrealized gains 1.56 crores. Overall IRR is 14.63, number of folios, this data is there. So this is a testimony, and I'm sure there are many more success stories like this. This is the real democratization. And today, this person is supporting education of girl children in his native village. So I think it's. In fact, I was telling the distributor, you should go out and share this. She told it much better than I'm telling you. She told it with such passion that I was, really impressed. So success factors are responsible guidance, professional, and see, he entrusted her. He didn't know anything about the market. He simply entrusted her with with his money. So responsible guidance, professional fund management, discipline investing, and power, everything has come together to make the success story. Now, let's talk about what do you mean by growing the right and responsible way. As a regulator, we can only go up to a point. When we can create frameworks, we can create do's and don'ts, we can create penal provisions and so on. But when it comes to some misconduct which happens on the ground, we are not there. And in that sense, our job becomes post facto reactive, and you can't help it. So we can go up to a point. What we need is, while we grow, while we celebrate, we should also focus on effective self-regulation. And that's what we're trying to do with MFI. That's where culture and ethics becomes important. Effective gatekeeping, role of auditors, internal and statutory, role of AMC boards, role of board committees, role of trustees, all this is very important. And outcome-based collaborative. I'll talk today, I want to focus more on culture and ethics and maybe a little bit about outcome-based collaborative, what I mean by that. So the ethical behavior, how do we strengthen that? There are very good players in the market. I'm not at all trying to suggest that it's a huge issue, it's a huge market failure issue. No, it is not. I'm just trying to suggest that while we grow, let's also continue to strengthen our systems so that there are no accidents. There's no loss of trust of investors who are reposing faith in the industry. So culture is a very abstract, amorphous terms. It means different things to different people, but we need to break it down. What exactly does it mean, especially in the context of the mutual fund industry? Generally, it is referred to the way of doing things, it drives conduct, it shapes decisions and actions at every level. And also, culture, sometimes it gets confused that you have a good value statement running into number of pages and people sign on it, some codes of conduct, but that does not necessarily ensure that that is the culture of the organization. Culture of the organization is what is the core of it, what employees view as acceptable behavior. You may have reams of paper, but there could be a huge disconnect between what is practiced and what is preached. So in that sense, it's very important to identify that point. But if you ask me personally, if I can describe just in one line, it is doing the right thing in the right manner. So, if you're just conscious of that, I'm doing the right thing and I'm doing it in the right manner. So both ends and means are sort of taken care. And very often, we've seen so many scams and crises world over, even the global financial crisis. If you ask me, if you drill down deeper into the reasons for global financial crisis, you will probably identify that it was a huge ethical failure on part of the people who were selling those, the products which were designed to harm the investors, which were missold to investors and caused huge losses to investors. But very often, as it happens, we shoot the messenger, but we don't address the root cause. There was very little discussion on the ethical failures or on the ethical dimensions of the crisis. A lot of other reforms happened. So root cause often is ethical issues, ethical culture, which is not much talked about. And key to ensuring that investor interests are prioritized over short-term gains could be just one guidepost as a part of the culture the AMCs and the distributors and the rest of the stakeholders would like to emphasize. Challenges to ethical culture. Why does ethical lapses happen? See, there are competitive pressures in an AMC. There could be 5 fund managers. Each fund manager may be competing with each other to show better performance. There's a competition internal, apart from the external competition. Growth pressure. Everybody wants to be in the top 10 AMCs. I want to grow my AUM, come what may. Do whatever is, if others are doing something wrong, you can also do it, but grow your AUM. So I'm just generalizing. Pressure to deliver returns. I have to give returns to investors. Even if I have to fudge, I will not mind. Again, exaggerating. And also sometimes there is a fear from the regulatory scrutiny. What if I'm caught? Let me hide this. Let me hide it as much as I can. Over the years, if it gets exposed, it gets exposed. I'll not reveal it today. So I do some putting things under the carpet and so on. Just a cartoon to show this is a desert, very dry place, and the water bottle is being sold at 100 euros per bottle. And the discussion about who are selling it is unethical, but fortunately, from a business ethics perspective, it is ethical. That's how you justify, you rationalize something which is, unethical at the core. Again, another cartoon just to sort of make the point. So I'm not sure if you can read this here. This is a corporate office setting, and they are discussing a complicated issue. So what is stated here is it's a complicated issue, but I think we should take the financial high ground. And what is not stated here is there is a moral high ground and there's a financial high ground. And you choose the financial high ground. Moral high ground can wait. Let me give you another case study of Wells Fargo. Many of you would know it's a bank, financial institution, very big bank in US. And, a lot of mis-selling, cross-selling happened. Let's look at some details. It was unscathed during the financial crisis, global financial crisis, but huge scandal which came out in 2016. Over 3 million unauthorized bank accounts were created. 565,000 unauthorized credit card accounts. Basically, you will cross-sell a product to an existing customer without whether the customer needs it or not is not the issue. You have the targets, you are at the branch level, you need to increase the business for the branch. And we see it happening in our system also. We get so many marketing calls and your number is picked up from various data banks. Forged signatures, false records. It's a long, there's a Harvard Business Review has done, Harvard School has actually done a case study on this. You can see the details and it's very interesting. 5,300 plus employees terminated. CEO resigned. CEO defended the behavior, but he eventually had to resign under tremendous pressure. Billions of dollars were paid in fines, penalties, and settlements. And of course, it impacted the reputation of the bank. Now let's look at this Wells Fargo story. If you read their culture and value statement, it's fantastic. They say the same words. We believe in doing the right thing. We believe in doing things in the right manner. We will not compromise on this. Business can wait. All that is mentioned. But in practice, things go stray. So leadership actually promoted aggressive sales goals, incentive structures, sales quotas and bonuses were linked to cross-selling of products. Team level culture, there was a fear, retaliation, and misconduct was somewhat normalized. Risk management, again, prioritization of business over risk and controls, and overall broader governance and oversight, board failed to maintain that. So this is a sort of, I thought it's a good case study because things are going well, bank is growing, but what is, not known, what is the real story behind that growth? Sometimes, we need to understand that. What are the characteristics of ethical culture? It's definitely ethical leadership. You set the tone at the top. You need accountability, organization, right from the junior level to the senior level, reporting mechanisms, appraisal systems, and so on. And it has to be, it's not just one person. When things go wrong, it's the whole organization which suffers. Robust governance frameworks, which are required at various levels, right from the board to the lower level. Transparency. See, it's one thing to talk about we are a very ethical organization, but what is the transparency around the ethical practices that you practice? My culture and value statement can be just like Wells Fargo. But what is the transparency? And also, if I can point out, if there is evidence around ethical practices, regulators can breathe easy. Regulators can move more to a principle-based regime than a rule-based regime. Speak up culture. Do you allow, if something wrong is being noticed, can that person really speak up? And if he speaks up, will he be protected? Do you have that sort of framework, whistleblowing, and so on? Another point, alignment of incentives with ethical behavior. Or do you reward ethical behavior? Do you recognize ethical behavior? Very important. So, as we saw in the Wells Fargo case, again, I'm going back to that, incentives are more on business expansion than the ethical practices. Education and training on ethics. We never talk about this. In fact, I've been telling Navneet also, let's do a conference on ethics only. And you have a good, Amphi took a very good initiative of ethics committee. So as I said, not that our house is on fire, but the point is we need to bring these issues front and center so that enough guardrails are built from within the system where regulators also doesn't have to do much. This is all part of self-regulation. Now the last piece of my presentation. So towards outcome-based, collaborative, sorry, it's a little longest technical sort of phrase here. So what I mean by this is that what truly matters is the investor outcomes and market integrity. We want to work very closely. We've been working very closely with Amphi and we want to strengthen that further. That is collaborative regulation and we want to focus on outcomes. And the outcomes are not just that you are ticking the box. Compliance is just one important piece, but what matters is the investor outcomes and market integrity. And this can be built only when we trust each other. The stakeholders have faith in each other. What are the advantages? If I do something without consulting Amphi, I may come up with a rule which is not very practical. Because Amphi or the industry players are more familiar with the ground realities. And that is why the need for collaboration. And as some of you know, we've been very closely engaging on any important policy initiative with the industry. So this actually collaboration with the regulator brings us on the same page in terms of what is the purpose, what is it that we are trying to achieve, and it also builds a feedback loop. Wherever we are, maybe overdoing or underdoing, its industry tells us that, look, this is a place where you're going too far and you should not be doing this, and we'll listen to them. Eventually we'll decide, but we do listen to them. It also provides opportunities for simplification, like you mentioned about too many schemes, so we are working on that piece. It builds ownership of the achievement of outcomes and accountability for observance of the principles. And since it's a collaborative effort, so the ownership is also there. That's another advantage of having this approach. And one illustration which I would like to point out is on the institutional mechanism to check front running and other fraudulent practices. We've had a lot of engagement with MFI and we asked their proposal, we refined it, again, many iterations between us. And now we have some feedback once it has been put in practice, and we are looking at it, how we can further simplify that or how further improve it without compromising on the market integrity issues. So again, just to re-emphasize, compliance in itself is necessary. I'm not trying to underplay the significance of compliance, but it is not an end in itself, but it is a means to achieve the desired outcomes in the market. So just last slide, I guess, some takeaways. See, it's a big topic and we can just go on discussing and talking about it for a long time, but in the context of what I mentioned, what are the key takeaways? I think we need to avoid short-termism. We need to focus on building long-term. Sorry, I'm pontificating here, but this is something, these are mantras which we need to remind ourselves off and on. So we need to focus on building long-term investor value. We need to build trust through transparency and simplicity. Keep the things simple. Again, going back to too many schemes or too much jargon and so on. Beware of the slippery slope. Seemingly small compromises can snowball into bigger issues. And, I looked up at what Mr. Raju, when Satyam happened, he wrote in his letter to the board, and all of you know this was a big fraud of about 7,000 crores, involved fake invoices, inflated revenues, non-existent bank balances, understated liabilities. So what Mr. Ramalinga Raju explained, he explained how an initial cover-up for poor performance escalated. And I'll just read out, it is from his letter. So he says, what started as a marginal gap between actual operating profit and the one reflected in the books continued to grow over the years. It has attained unmanageable proportions as the size of the company's operations grew over the years. Then he also says, which became a very famous quote, it was like riding a tiger, not knowing how to get off without being eaten. There's more to it, but I'll pause with that. So the point is, any slippery slope has to be arrested in time, has to be dealt with effectively in time before it becomes too big to handle. Next bullet is more for distributors or the sales people of AMCs. Apply the family test. Ask yourself whether you would be doing and saying exactly the same thing if your family member was the investor. That's the true test. And it's very simple, right? It's basically facing the mirror. So mere lip service to ethical conduct, as I said, you may have very fantastic, and today AI tools can give you don't even have to, they can give you a fantastic statement to keep and they can design the framework. But what matters here is the implementation. You have to walk the talk. Just the talk and having statements is not good enough. You must, of course, I would ideally like every AMC to say that we believe in strong ethical behavior in our company. Make a public statement. But don't just leave it at that. You should have very studied framework below that statement in terms of various tools, various mechanisms, various frameworks to achieve that goal. And you should be able to demonstrate that. That's what my next point is. Demonstrate evidence of commitment to fair and ethical behavior, to inspire trust of regulators and other stakeholders. We can sleep easy. If there's an evidence of commitment to fair and ethical behavior, uh, it becomes, we are preparing ourselves for more principle-based regime than a very granular rule-based regime. Uh, I will pause with that. Thank you very much. You've been very patient with me. Thank you.
Stay on for a couple of minutes. I'm sorry, we didn't really anticipate that you would ask, you would
No,
want
no.
to ask a question to people on the dais. It's usually the other way down. But a couple of remarks we should get, because that's a vitally important point that you raised, that are there enough investment opportunities to handle the kind of flows that we are saying? And we are saying that we want to expand the investor base even more. So one CEO and one CIO should take this question. Have enough investment opportunities to take all the money and
So you're not happy with all the questions you asked, and but I think your point is valid, and there are pockets like we keep debating the mid cap space of 150 stocks, where so much of money is going and temporarily creating pockets of fraud. But at large, like I said, what I'm very happy about is the large growth of hybrid funds, asset allocation funds, which has equities, fixed income, gold and silver, and global stocks. And between these four, we can get the next 5 lakh crores also. REITs has started, but of course, REITs, the system also, ecosystem also has to develop in terms of many more credible options to absorb retail money. So I think for now, I feel that the flows that we are getting is reasonable enough in terms of the asset liability match, barring these pockets of internally in our ranking, we feel the mid cap space is where the froth is more. Small caps we are comfortable, large caps we are comfortable. It is because this mid cap is a very sweet spot. Large caps also put their money there. Small cap guys also put their money there from all categories in this 150 stock. So some thought around how to manage that hard limit of 150 stocks to a certain extent. I don't know, but better guys to.
No, Sam, I completely echo, because if you look at the ownership in the top 100 companies, I think we're a long way to go. A small cap, the universe is expanding because we have large number of new companies getting listed. I think that 150 needs reconsideration. With time, that should have expanded. I think that needs to expand.
And just one point, sir, that the global space is useful for investor outcomes, but right now the limits are shut. And I know SEBI has been also trying to working with RBI. So that can again, give a reasonable pressure cooker relief.
Just to sort of supplement, so what, Navneet, what you mentioned, so we would like to see more self-restraint in the sense, he explained about stopping flows into a particular scheme. And as a regulator, I cannot do that. It's a free market, right? And I should not do that. I'm not controlling here. So if the industry does that sort of self-restraint, I'll not accept beyond certain amount, or I'll keep it open only for a short time, and because of good reasons. And you explain those reasons. I think that kind of behavior will really inspire more confidence. Thank you.
one question for you, that what are you as a regulator going to be able to do? For example, the question that I posed to them, that we need to expand beyond equities and debt. What is it that you could do as a regulator to expand the canvas of mutual funds into real estate, making things easy for them to come under the MF framework?
Sure. So we are, regularly thinking about these things, and maybe just to give you an example on the real estate side. So now we are considering, we did a consultation also on that. Can we increase the limits for investment into REITs and InvITs? Not only that, we are even looking at, today you have flexibility of treating investment into REITs as equity, debt, or hybrid. So we are looking, can we make it equity? And there is a divided house. Just treat it as equity as it is done globally. If you do it, if you classify it as equity, a lot of passive money can come in, and that will create some. I mean, there are arguments on both sides, but these are the issues that we keep discussing and debating. Definitely, we are, as I said, we are paid to worry, so you don't have to worry.
Thank you. Thank you so much, sir.
Thank you so much, Mr. Singh, for that insightful and thought-provoking address, and also the opportunity for others to ask you questions. Thanks a lot. Well, moving on to the next segment of this evening, ladies and gentlemen, as India's growth story gathers pace and equity valuations remain high, investors are faced with a crucial question. Where does the next big opportunity lie? Do you stay with the ongoing investment led cycle, or is it time to position for a consumption rebound after a period of underperformance? Our next discussion will unpack the risk reward dynamics of two key themes: investment versus consumption, exploring sectoral trends, valuation comfort, earnings momentum, and the macro risks shaping investor sentiment. To moderate this important conversation, please welcome back on stage N. Mahalakshmi, and joining her for this discussion are our esteemed panelists Ashish Gupta, CIO Axis Mutual Fund, Rajiv Thakkar, CIO and Director PPFAS Asset Management, Nilesh Surana, CIO Mirae Asset Investment Managers India, and Sri Datta Bhandwaldar, Head Equities, Canara Robeco AMC. Let's welcome them with a huge round of applause.
Thank you, Nandita. Of course, this is also a vitally important discussion. I mean, everybody in the end wants to know what are the stocks and sectors and themes that are going to make money, right? And where do you invest, whether you're a stock investor or a fund investor. And I think one thing is really settled, which is again a message that has been going out from almost all fund managers, at least over the last 1 year, that the markets are getting tougher, the alpha opportunities are reducing, and the post-COVID phase, the first 3 to 4 years that we saw of very solid returns is not going to be replicated. We'll have to focus on stock specifics, fundamentals, pockets, and even within sectors, you have to be very choosy about which stocks you invest in. That is settled. But the interesting thing about the four gentlemen out here and why I'm excited about the panel is each one has a slightly different style of investing. They're postured differently. They have, therefore their views can be quite different. And we'll try to assimilate their views and their logic so everyone can take away whatever they are most convinced about. So thank you so much, gentlemen. So the first question is, there are three broad categories in markets, the way we've understood it: the consumption theme, the investment theme, the China plus one theme. But today we can talk about all three. But the big question that people have been asking is that, is a consumption revival, is consumption going to lead the charge in the next round? Is that where we are going to make our money? Because investment phase has sort of done the heavy lifting over the last, in the post-COVID period, especially because we were in an investment upcycle also triggered by huge spending by the government. Is that, in a sense, likely to get swapped in this phase? Sri Datta.
Good evening, everyone. I think it's an interesting question. Most of the time we try to answer questions in black and white. My answer is in between, actually. It's going to be barbell. That's how we are looking at it. But having said this, on this barbell, I think both sides, whether it is investment side or consumption side, there are certain clear-cut trends that are visible. And as you rightly said, and I largely concur with that if you look at not only last actually 4 years, but if you take last 10 years, effectively, predominant focus both from central and state governments and then real estate joined the party, which are the three critical components of capex, have been on the positive side. In fact, the growth in these three three categories, if you take 5 years, has been upwards of 13, 14% CAGR. Even if you take 10 years, it's actually roughly 10, 11%, which is a little bit higher than nominal GDP growth rate. And that clearly propelled the kind of rally that you have seen on the investment side, because to start with, they had gone through the underperformance of the entire last decade, because balance sheet, we started the last decade with leverage. And that's where there were a lot of challenges, both on banking and manufacturing side. And as you came out of that, you got both the earnings re-rating, driven by all three components. And in fact, private capex was also healthy for 2 years, calendar year 22 and 23 particularly. All four components were firing. And so you got a growth which was clearly above average. Now, having said this, does it mean that you're likely to see a substantial slowdown? Our sense is it is just going to be moderation. And incrementally on investment side, clearly you have to actually opt for pockets where either for geopolitical reason, which is some of the defense, aerospace, and some of the areas where probably opportunities will continue to expand. So you have to continue to look at them, not necessarily the same stock, same spaces, but that one you have to continue to look at. Clearly, transmission and distribution is a space which you have to continue to look at, given how the power sector dynamics is changing. You would also continue to look at renewable power itself. Now you can choose, pick and choose the part of the value chain that you want to play, but you have to continue to look at. So incrementally, yes, the margin of safety on the investment side has gone down. Incrementally, there is a moderation, except for private capex, which we are expecting that at some point in time will kick in. But clearly, public capex has kind of plateaued, mostly probably run at 8 to 10% CAGR over next 2-3 years. And when I look at all these three things, on the investment side, clearly we would want to be placed in a space where the profit pools are expanding and there is a high visibility. And those are the three spaces where I clearly see that, okay, both these criteria are getting met. So that's the investment part. When I actually start looking at the consumption side, I think clearly when you again look at what are the key drivers for consumption, actually the key two drivers for consumption fundamentally are, of course, one is job growth rate, wage growth, and third is whether we like it or not, again, Indian basically economy is structured in such a way that again governments play a very, very critical role. I'll again step back and say, when you look at the revenue expenditure of state central government put together versus the capital expenditure of state central government put together, this regime over last 10 years has chosen predominantly the investment side or fixing the supply side versus the consumption side. And that's where the revenue expenditure generally has been lower, which has also been one of the factors apart from subpar job growth, which has led to mass consumption. Again, when we talk about consumption, it's the mass consumption which has suffered, not the luxury consumption. Our sense is incrementally the redistribution of government resources has started tweaking towards the basically mass consumption
get better top line growth driven recovery, we will not really have a margin expansion.
Right.
And when we look at any kind of big re-rating story, right? So there are three components. One is top line growth coming back. Second is with top line growth, operating leverage kicks in and your profit grows faster than top line. And on third count, you see a valuation re-rating, right? Uh, on the consumption side, I think the latter two are missing this time around, because while top line growth has slowed, margins are still high, and actually multiples are still not cheap, right? So we have not seen absolute de-rating. Yes, they would have underperformed a lot of the investments side stocks, but absolute multiples of most consumption names are as pricey as they were, right? So that's the only difference I will have.
Sure. You concur with that, Nilesh?
Yeah, if I have to maybe take a near-term view and longer-term view, see, I concur that on the investment side, I think at an aggregate level, it's a very peculiar market in my opinion, where we're not seeing anything which is very cheap. And there are certain pockets which are slightly on the expensive side, and most of them happen to be in the, let's say, investment-oriented businesses. Post-COVID, we have seen, I mean, massive thrust on the at a top-down level. I mean, if you look at it, the investment in the has grown at around 15-18%, and it's literally the budgets have tripled in last 8 years. But if you see the so-called narrative businesses where there is a valuation froth, be it defense, EMS, capital goods, etc., they are mostly on the investment side. So I'll be slightly cautious that good theme, good narratives need not be good investment, because you have to look at the valuation part. On consumption also, while the valuations are, some pockets are expensive, but I think from a near-term perspective, let's say next couple of years, not in a medium-term perspective, there should be mean reversion in the bottom of the pyramid or the mass consumption on discretionary side for multiple factors. Rural income, the rural incomes are good. RBI has done very prudent, decisive, and timely action of injecting massive liquidity. So the interest rate easing, faster transmission is happening. We have next year pay commission sort of coming in, income tax sort of is coming in. Also, the stress in the system has been there for last 4-5 years because of inflation. So that would happen. Longer term, of course, consumption is a very powerful theme, again, subject to valuation of the stocks, because if the narrative is the country per capita will increase, then obviously the scope to increase the discretionary consumption is massive. If you increase from $2,500 per capita to whatever middle income economy. The challenge is that you have to juxtapose and see the valuation part also. Right. But between the two, I would say that consumption appears much more sort of reasonable. But Mahalakshmi, the thing is like both investment consumption are very generic things. I mean, there's so many underlying businesses, yes, so many cohorts that you have to slice and dice and look at more bottom-up thing. For example, the mass consumption, where the earnings have not happened in last 5-6 years, I think that have much more reasonable valuations than premium consumption or leisure and some of those stocks which have done well in the last 4-5 years.
But do you see triggers for mass consumption to really kick off now? Because somehow in most of the spaces, you know, it's every quarter it's a different story. You know, first 4 quarters you say, okay, this pocket of urban consumers not doing well.
Yeah, no, so the corporate commentary still is not showing too much of results on the ground, but I think the top-down triggers are very, very strong. You look at RBI action and it's massive interest rate easing, macro-prudential norms are getting reversed, liquidity injection, rural is recovered. I mean, we are seeing one of the best crops. And let's say if this monsoon is okay, you will have more confidence. The impact of inflation is coming down on the rural side. And then you have the income tax thing. There is a wealth effect of gold. And also maybe pay commission is also a large number next year. So I think the theme is there, but you're right, that is yet to happen. What most people, most economies are saying that, particularly from the interest rate easing, etc., you'll see next couple of quarters things should sort of stabilize. So you're right that today there is no buoyancy, and also the fact is that many of these categories, they are not saturated, but they have suffered. Let's say the passenger vehicle entry segment is lower than what this whole 6 years back.
Yeah.
So that has been the pace of slowdown in that mass bottom of the pyramid. So I think over time, because they are not structural degrowth sort of story, it should recover. Hopefully over the next year or so, at least signs should happen. And by the way, lastly, we're not talking of very high growth. What we are talking of literally Maruti type growing 1% to 6-7% volume numbers, right?
Right. Rajiv, how much of this consumption issue, I mean, there are 2-3 parts to it. One is Is there a structural issue? Is that what is keeping consumption down? And all these factors like liquidity, etc., does it really alter that? I think that's a larger question that we need to answer, because especially since is it truly a structural story?
Let me throw a googly here. Let me argue that there is no consumption slowdown.
Okay.
For each order, which is order for a biryani placed on a food delivery app, a 2-minute instant noodle does not sell. For each D2C shoe pair that is sold, the listed shoe company does not make a sale. Right? For each streaming media subscription, a footfall does not happen into a theater. So Rama Bijapurkar many years back wrote this book that multinational cornflakes sellers came starry-eyed into India saying a billion plus population will sell them tons of cornflakes. But culturally we want idli, parathas and upma. Cornflakes never sold in India. But today when all your gambling apps are selling, when there are instant sales of high-priced concert tickets and which sell on black later on when IPL tickets are selling out. It's a problem of the Bollywood movie makers and the multiplex players in terms of getting the value equation right and selling the right product. I think whether investment or whether consumption, when India's GDP is growing, it's growing in both ends. It's a problem of the individual company and the market dynamics that their product is not selling and their P&L is not showing. What we are focusing on is there pricing power? What is happening to competitive intensity? Will profitability come with volume growth? A big box retailer, a well-known name, well-run company, March 25 quarter showed a volume growth of 14% or 17%, somewhere thereabouts. PAT declined 4%.
Yeah.
Why is that happening? Because everyone wants to be your grocer. There are maybe 7, 8, 10 players wanting 10-minute grocery delivery. There are 5 big box retailers, and the Kirana players have not gone away. So we are focusing on spaces where either there is stable competition or the number of players are coming down. That is where we are finding opportunities. Sector after sector, lot of wealth destruction is happening purely on account of increased competition. So whether it be paints, retailing, I mentioned, more players
Same with the some of the renewable value chain, but you have to be careful again what part of the renewable value chain you want to play. Do you want to play utility, or do you want to play equipment manufacturers? Within equipment manufacturers, who's the guy who's backward integrated, who's not backward integrated? So you have to be very, very careful about what you play in some of these segments, because while they are growing at 30-40% CAGR, they're also trading at 30, 40, 50 p.
Correct.
And that's exactly the reason when you actually just about it with consumption, within mass consumption, except FMCG, where there are all the challenges which Ashish or Raju or even Nilesh alluded to, the competitive intensity, changing consumer patterns are hurting those segments. But there are a lot of sub-segments in low ticket consumption, which is two-wheelers, low-end cars, basically rural consumption. You have basically the consumer durables, building material space. These are the parts of the consumption where the valuations, if I look at them from a 5-year perspective, they are probably down on an absolute basis or at the same level with lower margins and probably lower earnings growth, much lower earnings growth. So that's how I think that's where I said from odds perspective, probably if you can actually on a bottom-up basis find out the sub-segments on consumption side, you have higher probability to make money because your starting point is far better. And actually, again, going back to that point, if you look at India, the largest actually capex growth you got was between 6 to 12. And it was predominantly driven by the global rally, whereby your absolute growth was very high. That led to very good balance sheet. Government did actually excesses on revenue expenditure side, and that's where anywhere between 9, 10 to 13, 15, you got huge consumption rally. After that, consumption has been struggling. Okay. So at the margin, you have to have either of the two things in place. I think the absolute high nominal GDP growth rate and job creation, or you need government support. And my sense is, on a broader basis, at least, we do whatever we do on bottom-up basis. But from a top-down perspective, the redistribution of tax revenues towards the consumption categories or revenue expenditure has already started. It'll only get added over the next 2-3 years. That's my sense.
Fair enough. Ashish, one subsector that you are most bullish about?
So actually, I'll go to financials. So, or you are saying from consumption or investment?
Yeah. I guess financials, all of you will pick, so I'm not asking that.
Yeah. So I think really on the investment side, I'll agree. Equipment manufacturers on the T&D side, I think there we clearly see both the top-down opportunity. We also see potential of limited competition. I think yes, valuations are not really in favor, but I think there are strong moats to businesses that are in place. So I think that would be one thing.
Okay, Rajiv.
So our preference is for niche businesses where it's not worthwhile for the biggies to come and try and compete. They generally get ignored, saying too small for us to go and compete. So they let the existing incumbents live in peace and do their thing.
Okay, smaller sized consumer businesses, you're saying, where competition cannot disrupt.
Yes.
Okay, fair enough. Nilesh?
As I mentioned, that one has to have more diversified, not one particular segment. There are so many businesses, but as I said, near term, there will be improvements, mass consumption discretionary items. And more importantly, from a very longer term lens, couple of decades lens, this makes a lot of sense, because if the per capita increases, you have, all of us know the foundation of the growth of India economy is based on demographics and consumption, better dependency. You have favorable age profile, more women in the workforce, proliferation of media. All that builds up into many categories where the penetration or the headroom to grow over the next couple of decades is there. And we are in an opportunity where some, let's say particularly the mass consumption has been soft for last 4 or 5 years, and that's more, it's not structural. So I think I will just tend more towards, if the question is more on which theme, it's more towards consumption. More importantly, not only the longevity, the canvas is very wide. If you look at consumption fund, they invest in even B2C banking franchise, they can invest in hospitals, any B2C businesses. So between the two, I would more veer towards consumption. But as I said, it's subject to very valuation. A lot of Rajiv mentioned, most businesses are having competition and or disruption. So we can't say paint may be a good business, but there are other issues of competition. So one has to be very
Sure.
careful.
Today, thanks for that. Just one question which was out of syllabus, but we have to ask this today because, weekend, a lot of news flow. It'll be a big miss if we don't touch upon that. How do you look at the current geopolitical development? Is this a bigger risk than whatever we've seen over the past 2-3 years since the Russia-Ukraine? Somehow the market seemed to shrug off even this today. 500 points down on the Nifty. Doesn't look like they're really worried about crude prices or anything happens to the risk to global equities. What is your take?
I think it's anybody's case. I would rather pass that question because just after 1 hour something else might happen. So I'll just actually I don't think we can predict these things. What we as a portfolio managers are actually trained to do is how can we actually find out businesses, whether it is sectoral level or individual level, who can actually create basically free cash flows over a period of time and redeploy them in a good manner, or operating cash flows and redeploy them in a good manner.
And you remain fully invested.
We always remain fully invested, upwards of 90. We don't keep cash. And that's on a very, very fundamental tenet that basically investor has allocated money. We believe as a house, we are fairly conservative.
Right.
So there is 2 legs of actually decision making that has already happened. There is no need to actually additionally create one more leg. There could always be short-term challenges, but that's okay.
Cool. Ashish, do you see?
Yeah. So I would like to only submit that, there's a statement, if there's risk everywhere, then there's no risk at all, right? So what's happening does not just affect India. In fact, frankly, you can argue both ways. Some will argue India is more immune to some of these pressures. Of course, there's geopolitical trade pressure, so you can say India is more immune. We are not so externally dependent. You can also argue that because of oil, our dependence is higher. But the fact is that if I look at sum total of risk, whether on trade, whether on geopolitics, the whole world is affected. You're also seeing as much risk in other asset classes, so whether it is equity or bonds. And some consequences is that none of the markets are therefore able to react to it, right? So what do you do? So if you sell India, do you go to China? Do you go back to US? You go to Europe? And actually, if you see calendar year YTD, most of the large markets have performed in line or even better than India.
Yeah.
Right? So it's not that India is outperforming. You look at many European markets, they are actually up 25-30%. Korea is up 30%. Initially, the narrative was that money is moving out of the US market is correcting, and therefore all these markets.
And of course, the chairman of AMFI, which is been a huge driver in creating the right environment. And of course, he's taking initiatives at AMFI to a different level altogether. And it's really a delight to talk to you, Navneet.
Entirely my pleasure, Mahalakshmi. Thank you so much.
And another distinction is that Navneet has been on the investment side and one of the few people who has moved from investment side to become a CEO. So I'm going to start with that, Navneet. As we've discussed in the first session and also in the address that Mr. Amarjit Singh made, there is often a conflict between what is right for the investor and what is desirable or what business wishes to accomplish. And as a CIO or as a fund manager, you're often more cognizant of the risks that the market poses. As a business, you are more focused on what you need to achieve in the next quarter and the next year. In your roles as CIO earlier and CEO now, tell us some instances of how this push and pull has played out, and how real is this problem and how are you solving it now?
So I strongly believe, I think a few years back, somebody in Moneycontrol did an article with me and they asked the same question. And I said, there cannot be a trade-off between the interest of the unit holders and the interest of shareholders. And if there is a trade-off between them, then in the long run, both won't be a winner. You cannot build a business where you don't put customer at the center of everything that you do. Our business, our dharma is fiduciary responsibility. And if you are not following that dharma, then shareholders cannot benefit in the long run. And again, I repeat, in the long run, you can always, maybe for a quarter or for a year, you can take a shortcut where you think that this is good for business, may or may not be good for unit holders, but that may not create the sustained value for shareholders. And I've always strongly believed that there is no trade-off. I think it depends on the time horizon. If you extend that, and shareholders are like perpetual investor, right? I mean, there is no end date to that. If you think about that, then how can there be a trade-off?
Okay, I'm glad you say that. Now, obviously, because
I
this
use
industry,
that word dharma, and you talk about the spiritual. So there's no English translation or translation in any language of the word dharma. Dharma is very unique to us. And the dharma for us, dharma is like pani ka swabhav hai behna. There's a dharma of water, there's a dharma of air, there's a dharma of, let's say, whatever. The dharma of us is fiduciary responsibility. And there is something called dharmen rakshati rakshita. If you do the raksha of dharma will do raksha of you. And I think if our dharma is fiduciary responsibility to our unit holders, they will ensure that the business does well in the long run. Yeah.
but as a CEO, you are bound by karma, right? I mean, dharma bhi hai, but karma bhi to important hai na?
So
Karma is not in
it
conflict
cannot
with
be
dharma here.
They cannot be disconnected. There cannot be disconnect. And in the history you go back, everything, whether it's a Mahabharata, Ramayana, everything, it's all about whenever you had a disconnect between what your dharma is and what your karma is. If you have a disconnect, then the outcome won't be good.
Okay. Now, it's interesting you talked about fiduciary responsibility because we want to spend a lot of time talking about that. How seriously do you think now there are a lot of nearly 50 players in the industry? How seriously do you think this fiduciary responsibility is really taken by the industry? What is your sense?
So I was deeply impressed by Mr. Amarjit Singh's presentation, and he rightly talked about the many things that SEBI and MFI together have done over the years. I think this is an industry which is like, I would say, one of the most regulated in the world. We are highly governed. The structure of the responsibility of AMC board, the responsibility of trustee board. In fact, the trustee board structure is not there the way it is in India, in many of the countries. And then the role of all the committees, the audits. We are hugely publicly scrutinized by people like you simply because you have so much of data and information in the public domain about us. You don't get that much of data and information about any other industry. And that's why you don't see a deeper analysis the way you see about us relatively anywhere else. But at the same time, you mentioned that over a period of time, it's not only the job of the regulator, or regulation alone cannot lead to the outcome that they would like to see. And that's where the role of the culture, that's where the role of having a sense of purpose, that's where the role of all stakeholders in the markets who have to strongly believe in, I won't quote too much from, let's say, Indian scriptures, but let's say Adam Smith, he says, trust is the oxygen of capitalism. Trust is the oxygen of capitalism. If you want growth and if you want like markets to do well, and if you don't put trust as the foundation of that, markets will collapse. It cannot sustain. And that's where I think the role of all of us, there's a collective responsibility on all of us. By the way, in our industry, if I remember correctly, from 2007 to 2025, the number of players hovered around 45. They remained same. I think you will meet a lot of people who have set up AMC. You will meet a lot of people where it got merged or maybe got closed, but the number of asset managers did not change. The industry grew from few lakh crores to 70 lakh crores. Now you are seeing a substantial increase. We would have crossed 50, and next year you will see probably 60 players. And I think, and several of them don't come from an institutional background. Several of them are, or most of them are professionals. And I just hope that they keep one thing in mind, that this is the most noble job in the world. This is the most noble profession in the world when you're dealing with somebody else's money. And over a period of time, it has to go from, let's say, one individual who's starting with few people. How do you build that institution, which is very important, because it's not only about failure of one player, the impact it will have on the trust of millions of investors who are putting money in the industry.
Fair enough. And you have been instrumental in creating this, ethics committee. And I do remember when you were just taking over as Amphi chairman, you were telling me that, this is what you want your legacy to be, in a sense. So you tell me more about the ethics committee. What do you really hope to achieve? Because my question is, at an industry level, you can put practices, you can put standards, but in the end, if you don't reprimand the bad players, if you don't take action, if you're not able to enforce, nothing really changes. It's just on paper. So how do you steer this really?
So first of all, this is not an enforcement committee. The ethics committee, consisting of stalwarts like Mr. Mahalingam, who was the whole-time member of SEBI, Mr. Shamala Gopinath, who was Deputy Governor of Reserve Bank, and Mr. Vishwanathan, a lawyer. The idea was that, and the discussion was that we are highly regulated, we are highly audited, we are like publicly scrutinized so much. We have all the regulation, then code of conduct, we have so many best practices
in fact, many
on
of your
almost everything.
competitors feel that,
Then why do you need that?
Correct.
But this is where also, I think as Mr. Amarjit Singh, going back to his presentation, he said that we want industry to be more and more doing the self-regulation. And it's about, like, if there could be matters. See, in our industry, in financial services, I always say the line between ethical and unethical, the line between what is right and not right, the line between what is legally allowed and not allowed, that's very thin. And there could be like the issues of ethical dilemma where you may need wisdom of other people. Again, like Dharma of India, the concept is very unique relative to all the other religions, because the Dharma is contextual. Every situation would be different at that point in time. And maybe the wisdom of some of these people coming from the background they come from, and maybe over a period of time, there could be more members of looking at things from a different lens than just trying to interpret a best practice or a regulation in a highly mechanical or in a highly, I would say, from a legal lens of that, yeah.
Okay. Now, another question. As a industry head of an industry, how do you really create consensus amongst? Now we are about 50 mutual funds. They're all kinds of sizes. Different plays in their growth trajectory, small and big. And obviously, not everyone's interests are really aligned, right? Like many at the bottom 25 may have very different goals and may want very different kind of guidelines compared to the top 10. And this has been a thorny issue at several levels. I'm not getting into the details, but how do you build that consensus and make sure that, the smaller ones are heard and you're able to sort of foster build some kind of a consensus, but that suits everyone, not just the big boys?
First of all, this whole debate on big boys and the smaller ones is not right. So we got set up in the year 2000. There were 26 AMCs on that day. So we were the smallest, and our license number was 44. So there were 43 AMCs before us. Somebody's became big, and the only asset manager that would become big, who would have done well for their unit holders, who would have done well for all the stakeholders, and this is an open market for everyone. I think AMFI is a very unique example for any industry body, not only in India, but in the world. The way all the 45 plus members, I think, come together and collaborate. During the day, we would compete very hard against each other on many counts. But at the same time, when it comes to the industry's interest, I think our interests are completely aligned. And just looking at your title was what? Truth, transparency, and true north. So for us, I think we all believe that truth is the foundation, transparency is the path, and true north can be like your compass. And I think we all of us agree on several things that best practices are very important. We all agree in the importance of financial literacy, the amazing work that has been done, I think, by all of us jointly, the amazing amount of work we all do together to coordinate, collaborate with the market regulator. Again, this is a very unique example. In most of the industries, they would always have a very conflicting or a very combative approach towards the regulator. In our case, it's always a co-creation between the regulator and us. And of course, that's how we deal with all the stakeholders, which includes our advisors, distributors, the other ecosystem partners like RTA, KRA, and all of that. And I think it's been like wonderful work done by people over the last 30 years.
Sure. Now, one thorny issue in the industry is this, launch of NFOs. I mean, lots of them. And this is something I think the regulators have also pointed out. Industry people also point out that, but still, there is a certain kind of incentive for AMCs to go ahead and launch NFOs. And many of them do it as a gathering strategy, not really focusing on whether it is a durable product, whether it will sort of stand the test of time and so on. Where do you stand on this as an industry? What can you do about an issue like this?
So you reminded me of my investing days, and we used to say always that the 4 most dangerous words in investing are, "This time is different." And I always say in our industry, in business, the 5 most dangerous words are, so the 4 most dangerous are, "This time is different in investing." The 5 most dangerous, and this is a standard line I say in every my induction program, all the interaction with my people, "Everyone else is doing it." The 5 most dangerous words in our industry is "everyone else is doing it." You shouldn't be doing something because everyone else is doing it. You shouldn't be doing an NFO because this is the easiest thing to sell. It should be something that your investment team has a conviction in. It should be something where you think that at least a segment of investors and a segment of partners have a space for it in their portfolio, and you have a capability to match that. And then, of course, all the other issues regarding the timing, the capacity of how much money you can take, the universe and all. The one good thing is over the years, and then this is again credit to SEBI, that lots of guardrails have been put in place for the last couple of years. For example, I mean, if you do a sector thematic fund, then minimum 80% in that sector thematic, which again is like very, very well defined. You have a benchmark which has to be very, very close to the theme or the sector that you are doing. And SEBI does a lot of screening of that. At the same time, I think in a market which is evolving, markets are like so small in terms of overall size relative to the size of the market. We were like 4% of the market. Now we are getting almost close to the 10% of the market in terms of ownership of mutual funds of the overall market cap. I think there is space for innovation, but that innovation should not come at the cost of making products a lot more complex or products which are not good for the end investors.
Sure. Here, again, I want to ask you something that is very, very fundamental, that, at a certain level, almost all, I think in the previous panel, except for Rajiv Thakkar and a few AMCs where people take very effective, very strong, proactive cash calls, etc. It's taken as a given that, people have entrusted the fund manager with the money, we have a mandate and we will remain fully invested, etc. But for most part, most investors don't know what they're doing. They've just chosen the product because it's an HDFC or an SBI, etc. The onus of, making the investor aware or guiding is also rests with the fund manager. So how do you sort of respond to that? Because you're saying, hey, I have created like 26 products. It's up to you whether you want to invest in the defense fund or the EV fund or the large cap fund. But I'll remain invested. But like Steve Jobs says, the customer doesn't know what's right or what is.
Again, going back to the scriptures. So the 2 most important things are in Indian scriptures, the way they are written. One is like, and I think in the Manduka Upanishad it comes Satyam Eva Jayate, which is like the in the Indian emblem. Just one second, let me complete this. The way it comes. So the meaning of that is the truth alone triumphs. Truth alone triumphs. Now, how do you get to that truth? The second concept is neti neti, not this, not this, not this, neither this nor that, and you constantly work on that. So think about it. So let's say you say my fund manager has done very well. Neti, neti. Neti, neti is you're showing me last quarter, you're showing me last 1 year. Show me 3 year, 5 year, 10 year, 20 year since inception. Then it still says very good. Neti, neti. Compare with the benchmark. Neti, neti. Show me like how you have done it. Show me the portfolio. Show me the sector. Show me your turnover ratio. Show me this. And it just kind of like goes on and on and on till the time you come to that. Now I've shown all of that. And then you say, yes, fund managers really done very well. Whichever way, all the ratios I apply, Sharpie and whatever we disclose in fact sheet. Then you say, no, the fund manager manages 3 funds. What about the other 2? Is it that he's done or she's done very well in this? Show me the performance and all the parameters of that also. Neti, neti. And then that's how you get that Satyamev Jayate, that the truth alone triumphs. And all of that. And again, as I said, like dharma is very contextual and very individual to everyone. If an AMC, and you discussed that in the previous panel, if they think that given where the market is, given where the valuations are, they're comfortable with that cash, as long as investors understand that, as long as distributors understand that, and in their asset allocation overall, they're comfortable with that, they need to take that call. Somebody else may have a different view. But broadly, there are like so much of disclosure, and that's why I said that transparency is the path towards that, the ultimate truth.
On that note, thank you so much, Naveen.
Thank you.
Again, running short of time, but thanks so much.
Thank you, Mahalakshmi and Mr. Manoj, for such an engaging conversation. Mr. Manoj, I'd request you to come back on stage to kindly, as we move into our next set of felicitations. It's now a time to celebrate the individuals who have demonstrated excellence, innovation, and impact in building investor confidence and accelerating the growth of India's mutual fund ecosystem. Our next recognition is truly special. It celebrates the spirit of leadership, resilience, and excellence in the world of mutual fund distribution. And the recognition goes to Jennifer Mendes for her remarkable achievement and for being a shining example of dedication, trust, and empowerment in the mutual fund ecosystem. Jennifer Mendes from Goa is an inspiring leader with over 20 years in mutual fund distribution. Her efforts in empowering families and women investors make her a true symbol of Nari Shakti. Unfortunately, Jennifer couldn't be with us to receive the felicitations, so her son, Schubert Mendes, is here accepting the honor on her behalf. Let's give him a huge round of applause. Well, our next recognition goes to Aditya Birla Capital Wealth. May I request Piyush Bishnoi, Head Product and Research Wealth at Aditya Birla Capital, to join us on the stage to accept the recognition. Aditya Birla Capital Wealth is a distribution powerhouse leading the charge in the Western region. With a strong investor network and commitment to financial inclusion, they continue to set benchmarks in mutual fund distribution. Ladies and gentlemen, a huge round of applause for Aditya Birla Capital Wealth. Congratulations. Moving forward, our final recognition of the night goes to Axis Bank. Now, Axis Bank has been a trusted leader in financial services. With wide reach and digital strength, they have empowered investors across India, driving deep engagement and mutual fund access. A true force in investor inclusion. May I request, of course, Amar Simha Baiji, Senior Vice President, Axis Bank. He's here on the stage with us and accepting the recognition. Please give them a big round of applause. Congratulations. Well, congratulations to all our honorees. Your achievements are a true reflection of passion, purpose, and performance. And we celebrate each of you for raising the bar in this ever-evolving industry. Thank you, Mr. Manoj, for doing the honors. Well, moving on then, it's time to dive into a conversation that's both timely and transformative. Gen Z, raised on a bull run and fire dreams, has recently faced a reality check with market corrections rather. Yet they remain bold. Nearly 45% of investors under 30 consider equities as their primary investment, with over 70% of their portfolios allocated to stocks. So how do we help this digital-first generation save smart, invest better, and stay invested? Now, this session will explore how wealth tech platforms, advisors, and distributors can build trust, encourage discipline, and deliver personalized experiences that truly speak to Gen Z's unique mindset. I'd like to invite on stage Abhinav Kaul to moderate this discussion, and let's find out what it takes to connect with this rising investor class with Sandeep Jetwani, co-founder Deserve, Dilshad Bilimoria, founder, MD, and Chief Financial Planner, Dilzer Consultants, Vishal Jain, CEO Zerodha Fund House, and Ashish Singhal, co-founder, CoinSwitch and Lemon. Please welcome them with a big round of applause.
Evening, and welcome to the Gen Z panel. So, at a time when the mutual fund industry is nearing or powering towards the 100 trillion milestone with 70 trillion in assets as of now, the role of Gen Z population is something that we cannot ignore. Now, this generation is very much interested in spending, but as we have seen with the new investors that have come into the market fold, they are heavily into investing as well. But it looks like many of these young investors that came after the COVID-19 pandemic, they took high risk bets in crypto, FNO, direct stocks with not much guidance. So in this panel, we'll discuss in an era where there are n number of options and there is fleeting attention, then how come as an ecosystem, we with mutual funds, advisors, distributors, and wealth tech platforms, how can we build better relationships or better investor decisions? Vishal, if we can start with you, like Gen Z population age is generally 13 to 28 years. And in 5 years or so, this population is going to drive mutual fund growth. Now, when they are tech savvy and they can switch buy, sell at the click of a button, is it good or bad for a mutual fund which requires a lot of patient investing?
Yeah, can you hear me? Yeah. So good question, Abhinav. I mean, keeping in mind that, look, at the end of the day, humans are humans. I think we've all been through ups and downs in life. I mean, I remember when I started off my career, at that point of time, derivatives have just started, way back in 2000, 2001. We all dabbled in the market. We all took punts in the market at that point of time. A lot of them went right. Most of them went wrong. And you learn and grow in that sense. And obviously, the ones that go wrong, you automatically become a long-term investor, yeah, right? And that's how you keep growing and learning. And I think that if you look at the current, age group, I think they're highly informed. They learn fast. They have a lot of information in their hands. And I think that, the cycle that we went through maybe two decades ago, they'll go through it faster in that sense. I would just like to say that, from a perspective of mutual fund investing, I think, as even all the other panelists in the previous panels alluded, we keep talking about the fact that, one should look at an asset allocation. That means keep investing across assets, whether it's equity, commodities, and debt, and even within equities, look at various segments of the equity market. Keep investing regularly. Stay the course. I mean, a lot of times you find that if markets fall, people stop their SIPs. Keep doing your SIPs at regular intervals. And as I said, to reduce risk, ensure that you have a good asset allocation with you.
Right, right. Now, Sandeep, these young Gen Z investors prefer apps or wealth tech platforms, direct investing. So do you think by directly investing into the market, they are making empowered choices, or are they letting go of personalized advice?
No, I think, first of all, the Gen Z, you spoke about recency effect and how in the last few years returns have been good. So therefore, how are these guys reacting? And I actually feel that the reason recency bias is a term is because it cuts across generations, right? It has been there for a reason. Most of the Gen Z are actually significantly empowered and aware, right? One of the things that we find in our engagements, and we deal with them on video calls, so we actually learn a lot more about how they behave, is that consistently they know enough and more about investing. In fact, there are times when we have to up our game to be able to keep them engaged and educated, right? So they actually know really well. What our job is constantly to bring back discipline, and in doing that, how do we communicate is actually very important. So even for digital platforms like us, the mechanism, the storytelling that we bring is really, really important. Like, recently there was this question on how or should I follow a fire goal, or should I create a certain corpus and then retire. One of the clients I was speaking to, he told me an interesting phase, and he's a 30-year-old who made some money off ESOP buyback. He said, Sandeep, we have to be really careful when all my friends are talking about fire, because I tell them that fire is fueled by irrational return expectations. So he gave a new definition to fire. Now that coming from somebody who is a 30-year-old, who's read up about the markets, who has chat GPT at fingertips, I think is fascinating. So I think the real responsibility for all of us is to up our game and be able to communicate in the way that they understand.
Right, right. You mentioned fire. I mean, maybe to achieve fire, many young investors might have gravitated towards riskier assets. Now, Ashish, you are founder of two companies. One is the CoinSwitch crypto exchange, another is Lemon, which is more into traditional assets. As in, and we have seen a lot of young investors came into crypto after 2020. So with the recent crash, did you see any change in their investor behavior, maybe gravitating towards more conventional assets classes?
Let me take a step back first and say thank you. This is the first panel in last 5 years where somebody's actually said crypto on stage. And I've been in a lot of fintech panels. People call it alternate asset rather than crypto. So thank you for doing that. And acknowledging, that crypto has been a newer asset class, riskier albeit. But investors, the Gen Z investors, because 70% of our users are Gen Zs, right? And how we have learned to cater to them, because crypto fluctuates a lot, being a new asset class. There's a lot of fluctuation in the market. I think trying to help them learn better, trying to figure out whether the fluctuations are something that is part of the game itself, or should they start allocating some part outside and look at this as a riskier bet, which could either pay off handsomely, or which could go to zero and still not hurt their portfolio, right? I think a lot of Gen Zs have started to understand that. In the recent times, we have seen some of them doubling down on crypto because they feel like, oh, this is the asset class they want to be in. Some of them start to realize that, crypto, I will only allocate 5 to 6% of it, and rest I will go to stock market, mutual fund, and do more passive, so that I have a sustained portfolio over the period of time. And that is the reason that we have Lemon as well, because a lot of our users wanted, alongside crypto, how can we do traditional investment better, simplified, and that is the reason we have both the products out there.
Right, right. So, I mean, so do you have a sense of extra responsibility towards investors? Because I mean, crypto is still unregulated, and we have seen some hacks happening, unfortunate events happening in the industry. So what extra do you do to reach out the message to these young investors?
I think I think I'll answer it in two parts. First is, how do you build trust in a digital ecosystem in a sector which is unregulated? And second, how do you mitigate or instances like hack, fraud, which are happening in this industry without a regulator? So I'll answer the second part first, which is when a regulator is there, our job becomes slightly easier because there are guidelines that you can follow. And ultimately, within the spirit of those regulations, you try to build your product, reach out to users, and try to sell your product. In crypto, the regulations do not exist. There is no clear regulator itself that exists. So we have to do a lot of self-regulation. But with self-regulation, the problem is that business will always push to get more business, and you'll try to take shortcuts. What we have learned over the 8 years that we've been operating CoinSwitch, the only way to build a sustainable crypto platform is to think of long term. What the MFI chairman was talking about as well is that it is not a short term game. Ultimately, you have to look towards long term, and so sometimes you compromise your business as well. We have taken calls where we have not listed tokens which we feel are risky. We have taken guidance from mutual funds and invented our own riskometer for crypto, so that we actually advise platform. We are the only platform in the world which advises to not to invest in certain tokens because they are highly risky, right? So I think taking that helps us do better. And answering the first part is about brand. Our digital first branding plays a key role. How do you communicate trust? So the founders have to be out there, because Gen Zs are are social animals, right? They're looking for people who are like them, building platforms like them. So as founders, we need to be out there communicating our vision to them, helping them understand crypto in a bite size, maybe TikToks, and creating more Instagram reels rather than creating long form articles, right? So building trust through brand is equally important.
Right, right. Now, Dilshad, talking about the long-term investing, you are the lone voice of advisor on this panel. So, I mean, traditionally, the sense is that long-term investing starts at 5 years and goes further. But with the younger generation, I feel like sometimes the investment horizon is like 1 year or maybe less. So, what is your experience like with the Gen Z investor while advising them, and how challenging is it for you to advise someone with the mindset that the 1 year is the horizon?
So I'll take off from where, and thanks for having me on the panel. So I'll take off from where Sandeep started, actually. I think the Gen Z is very, very well informed. They know what they want, but they don't know how to get it. And for example, if they were to come and research RIAs, they have already checked my background. They've already checked who, how many years of experience, what I do, etc. And they say, okay, this is what we want. Is it? They just want it to be validated. Is it the right thing? Is it the right way about going about this? Should we make changes? So I think that kind of validation is what they're looking at. Now, coming to their requirement of short-term, long-term, fire, retirement, etc. I think for us, it's a journey of taking them through the education and the financial literacy of where they are today and where they want to go. So, we start with what exactly are they looking at? What are their goals? What are their objectives? So, I mean, ours is quite a traditional kind of setup where, we do one-to-one, we do a lot of counseling, we do a lot of financial education. And then we move into the actual of, why of investing. And I think that has helped people kind of tone down their aggressiveness. We also talk
Aggressiveness
about
in terms of return expectations?
return and also quick money. So when I spoke to my kids, I think the first thing they said is, how can I make fast money? How can I make returns the fastest, right? I think there is no shortcut to success, right? Everything is a process-driven way. So I think giving them that counseling, that financial education, and making them aware that this is where you need to go, this is where you are, and these are the ups and downs that you will see in the interim. And I think that journey, explaining, they well understand and then move forward. Yeah.
Right, right. So, Vishal, at a time when the churn rate is higher, I mean, Gen Z or this new generation will look at a theme, invest, it's not performing, move out. So, how can we make them stay longer in the market?
So again, as I said, Abhinav, I guess we have to keep, drilling in their minds all the time in terms of, the same thing in terms of asset allocation, in terms of, a core and satellite kind of an approach. where the core becomes, the main reason in terms of why you're investing in the markets. Typically, most of us will invest only because of two or three main reasons. One is to beat inflation. One is to, benefit from the India growth story. And that kind of investing in a diversified, fund, passive fund or an active fund is where, that should be the kind of core of the portfolio. And if you want to take risk, that should be in the satellite portion of the portfolio, which could be, depending on your risk-taking appetite, it could be a 80-20 mix, it could be a 70-30 mix, it could be a 60-40 mix, depending on how much risk you want to take. And that's something that, we need to keep drilling in. And ensure that we keep talking about, as Dilshad said and Sandeep said, that keep talking to them, keep showing data to them, keep making them understand in terms of how do you calculate returns, how do you calculate risk, what are the upsides and downsides of the market. And it's just a constant education that all of us need to do in the industry.
Right. But Sandeep, do you think this message of boring investment, asset allocation, don't chase returns, does this message resonate with the Gen Z investor, or do you think we need a new communication method to reach out to them?
Look, I think we need to recognize that investing is exciting, right? Now, how do you ensure that that does not translate into too frequent actions is the problem to solve. And that's how we deal with it, right? For us, we manage money for most of our clients on a discretionary basis. So actually, it's actually doubly harder because we're asking them to leave it with us and then we'll handle it, right? Therefore, what we have tried to do is with these folks, be actively talking to them about how we are thinking about the markets, what are the actions we are planning to take, what are the reasons why we are not taking actions at a certain point of time, right? Once that engagement is established, the pressure to act on their side is significantly lower. And over time, then we've realized that it's all about communication. Most of the time, somebody wants to react or act when they are nervous or they are excited about something, and they don't have a outlet for that emotion, right? If in the conversations we are able to discuss it, we're able to engage with their energy and excitement, it does not translate into portfolios. In fact, I actually feel that when we look at the portfolios of younger clients, are they more impatient than potentially older clients? The answer is no. One of the clients I was talking to recently, he runs a small business out of Bhilai and something around a steel business. And he was telling me that paisa paise se banta hai, so I want to leave the money with you. I don't want to spend it, right? Now, that's such a fascinating thing coming from young folks. I think the industry, mutual fund industry also has done a fantastic job of educating that. I think the grounding is solid. We just need to engage in a way that they don't react too often.
Right. Now we are running out of time, but I have one round of questions to go. Dilshad, you are mother to two Gen Z kids. So what has been your experience like? And what do you teach them and what they teach you?
I think they're fed up of listening to me passively speaking to.
Do they invest on their own?
Yeah. So very much. So
Have they
older one
beaten
is,
your returns?
Sorry?
Have they managed to beat your returns?
Well, they've not been allowed to invest in crypto. So yeah, but I think the good thing is they've grown up listening passively to the importance of saving, investing, long-term growth, wealth creation. In fact, a funny story is when one of my cousins was down from Mumbai, my son started explaining to her the SIP and compounding and STP, and he spoke and answered all her questions. And then finally, when she came to a difficult, he just looked at me and said, "Okay, now what are you going to say?" I mean, they've heard it in and out in their thing. And I think the discipline of starting early. So even my older son, who's 21, he today has actually built 2 lakhs with no earnings. He's just starting his career today. Younger one is too young to, of course, he's 16, but still too young to understand the importance of money and saving and investing. But I think that is, half the work done when, they have actually realized that money doesn't grow on trees. You need to work hard for it. You need to save. You need to invest. And we did that right from the beginning, right? We used to like give them, small amounts of money if they did chores well, etc. So I think that value comes from the parenting and the upbringing at home as well.
Right, right. I remember during COVID times, Mr. Kalpain is in the crowd. He shared some lovely videos with his kid, explaining global companies and talking to his kid. Any advice that you would like to give to parents who have like 13, 15, 18 years old at their home, how they can introduce financial lessons, money lessons to them?
Well, just recently there was somebody in the industry who said that what we do is we try and ask the children to come if they're about 15 to 18 with their parents during our goal review discussions, because that's when they're actually finalizing their education, their undergrad or postgrad requirements. And we want the children to realize how much the parents are saving towards these goals, and that it's not kind of simple or easy to work up such large numbers. We also at that time try and finalize universities, costing, solutions of which area they want to go into. So it becomes a very nice family discussion, and sometimes a very heated one too, where I just step out and then they discuss and then I come back again. And so I think bringing children into these conversations at an early age would definitely help. And giving them, making them understand the value of money at a young age, making them realize that you're not born with a silver spoon. I think these are some of the parenting habits. I mean, I did. I don't know if they're working or not.
Right, right. Now, Ashish, I mean, uh, between people and apps, where does the future of investing lies? Or this answer is somewhere in between?
I think definitely something in between. I want to address one point before I answer this, is that I think we are talking about different set of Gen Zs when we are talking to this panel, right? One set of Gen Zs is who has money, who can hire financial advisors, and they're smart. The other set of Gen Zs which I deal with, I have 2 crore plus users registered on the app. I don't have the luxury to call every one of them and explain them what is investing. And that is where there is the other world who doesn't have enough money to hire a financial advisors, which we are solving for. And I think there are different problems set to solve for both. Probably we'll discuss it separately, but I just wanted to say that out loud, that there are 2 set of Gen Zs that exist in the world. Sorry, your question was between people and AI. I believe in the next 5 years, you will see a lot of AI assisted investing, not AI automated investing. So you would see a lot of people get access to information right on the apps, who have smaller money and still want to make good returns in their investment, would see a lot of assistance through AI, and apps would actually help them do things better, faster. And today, the biggest problem in the industry is that users don't learn from their mistakes. They make a mistake, they forget about it and move on. And they repeat that mistake multiple number of times because they don't have an advisor who can guide them in the right direction. And that is what even we are trying to solve, is can you learn from your bad decisions, and we can remind you at each investment that this is the bad decision that you made. Are you getting into that trap again, or can you do better, right? So I think a lot of mixed approach of AI with powered with the human intelligence is what we're going to see in the next few years to come.
Right, right. One question on mutual funds, Vishal. There are a lot of themes, fancy themes that have come up, defense, EV, and all. Do you think there are enough guardrails within the industry to safeguard young investors?
I mean, as I said, I mean, the industry is doing its bit to, to educate, investors who are investing in these themes. But you have to understand one thing, that at the end of the day, these products are being launched to, to allow investors to take differentiated kind of exposures. And typically you'll find that a lot of these exposures are being taken by more evolved investors than I would say, others. We have to keep, talking about and giving the right kind of message all the time. Keep training them in terms of how to build portfolios, and to ensure that, that they're not got too much of, risk piled on, in their portfolios. And I think that job of Amphi and the industry is continuous, whether it's Gen Z or whether it's, so many new investors who are going to come into the market. in the next couple of years. So it's a continuous effort that we have to do.
Right. Sandeep, quickly, with the recent correction, do you think this young generation investors are reconsidering their FIRE goals?
In fact, every time the market corrects, the question that we get is how much more can we put in right now, right? So I think because they've seen up moves, they feel that this is an opportunity to get in. And sure, I think depending on everyone's own financial situation, I think that's it. I think, frankly, look, most of them are in it for the long term, at least the clients that we deal with, right? They are not panicking. They are staying invested. They are asking all the right questions that, am I in the right portfolio mix? Should I increase some fixed income allocation? Their awareness towards bonds, and there are a lot of bond platforms which have done a great job of educating investors about fixed income options. So there is that awareness. The concept of asset allocation, a lot of them are actually familiar with. So I think I am actually very positively surprised by the amount of knowledge and information that they have in the client cohort that we deal with. I don't think they're reacting to near-term situations.
Fair enough. We are out of time, I think.
I just have one thing
Sure.
to say. I think the youngsters today, some of them who are working for these big tech companies, actually get a lot of money very fast. I think it's important for them to kind of, realize what is asset allocation and what should be their kind of strategy for I mean, it's, sometimes when you're flushed with a lot of money so fast, you need advice, you need an advisor to get it. So this even answers Malakshi's question when she said, how does 50 fund houses and 1,700 schemes and so many, reach? I think the awareness building by advisors like us, there are only 900 RIAs, there are 2 lakh MFDs, and there are these platforms. There is a need for one-to-one discussion and customer. So like, he said, I think a combination of both tech as well as advisory is what ultimately would lead to.
One last rejoinder there. Whenever somebody has 10 lakh rupees and you want to anticipate what kind of questions that you will get from them as a wealth manager, put that down in ChatGPT. Ask ChatGPT, I have 10 lakh rupees, what should I do? It'll tell you asset allocation, it'll tell you diversification. And those are the questions. That's the starting point for most of these younger folks.
Right. So I think we are at the end of the session. Thank you all for the lively discussion.
Thanks a lot.
Thank you, Abhinav. Thank you, panelists, for such great insights. Moving on then, we are moving into our final segment of the evening. It's time to talk about one of the most closely watched spaces in the market, small cap stocks. Now, after a sharp correction followed by a strong rebound, the big question is, how do small caps compare with large and mid caps in terms of risk reward today? As India moves closer to the $1 trillion AUM dream, small caps could be the key to unlocking the next wave of alpha. So has the rally paused, or is this, is the party just getting started? Let's find out. Please join me in welcoming our expert panelists, Rahul Singh, CIO Equities at Tata Mutual Fund, Ashish Tavakle, Deputy CIO Equity ICICI Pru AMC, and Niket Shah, CIO Motilal Oswal Mutual Fund, for this much anticipated wrap-up discussion. Please give them a huge round of applause. Thank you for all of you for joining us this evening. Of course, the topic of discussion is very interesting, small cap stocks, a lot of interest in small cap stocks. And, small caps have thrown quite a bit of a party, right? If you see the last 5-year returns, for the small cap index, small cap 100, the returns have been in excess of 250%, almost 300%, 4x returns. If you compare it with the Nifty returns, it's somewhere around 140% or thereabouts, right? So it's been quite a party. But the narrative has been shifting. If you look at the last 1 year, the Nifty has given much superior returns when you compare it to the small cap index, right? Very first thoughts as to where we stand in the small cap cycle right now. Would you call it a healthy pause, or would you say that, would you call an end to this party now, Rahul?
No, definitely it's a very, very healthy pause, and I wish and hope that it lasts a little bit longer. But markets being markets, you cannot have your wish all the time. So we have to make most of where we are in the situation. Good thing about small cap compared to mid cap, since you mentioned mid caps also. Mid caps, the sample is smaller and the valuations there, at least optically at the headline level, is much more expensive than small cap. In small caps, you get more choice. Obviously, there is more risk, more volatility. So what we feel, or what I feel, is that in small caps, I think growth is being priced in. The pricing of risk is right now not that appropriate. And to that extent, you will have these cycles, you'll have these pauses. And the more we have these pauses, the better it is, because otherwise we end up creating bubbles. And when those bubbles burst, then it's very painful, and then the investor experience is not good. So pause is much better for investor experience, because I think the SIPs continue. I think so. People who invested between November 2021 to March 2023, there was a long pause. We've forgotten that there was a pause of 18 months. But people who invested there reap the benefits of that between 23 and 24. So if we have another pause of 18 months, what's wrong with that? And yeah, those are my initial thoughts.
Sure. Coming to you, Niket, would you concur with that? Would you call it a healthy pause, or would you say that we may be nearing the end of the cycle when it comes to small caps? No, I think Anish, would you like to take that question?
Yeah. So I think we are coming to an end of the cycle. Clearly, we are seeing meaningful amount of opportunity in the small cap space right now. And I think one needs to keep in mind we run concentrated portfolios. So we essentially only look at 7 or 10 stocks in a year. And there are plenty of opportunities. I think the challenge in small cap is liquidity. You might get a fantastic idea with 3x or 5x return over the next 3 years, but do you get enough amount of stock? That's the big question in the small cap space. The other thing that one has to keep in mind is earnings growth. Small cap continues to grow almost at 15-16% in the last quarter, which is still far higher than large cap. FI holding in the small cap is probably at this highest level ever. The small cap and the mid cap share of profit in the entire market cap is now at almost about 27-28%. This used to be about 13-14%, and it's stabilizing at those levels, so it's not correcting. And last but not the least, what you have to keep in mind is liquidity, right? I mean, not liquidity from the fund standpoint, but also liquidity that RBI is injected in the system. All of that will have meaningful positive impact for the small cap going forward. But I think the next 12 to 18 months, one needs to be extremely selective. I don't think we'll have a broad-based small cap rally that we saw in the last 4 years. You have to be very selective, very stock specific, and stick to themes that you like.
We will come to themes in just a bit. I want to get in your thoughts, Anish. Would you take the middle path here? We have contrarian views coming in. And secondly, in terms of earnings, most of the downgrades have been led by the small cap space, right, for FY26. So where do you stand in this whole
I'd
topic?
be more inclined to Rahul's point of view, in fact, perhaps a little more extreme than his. So, when you said party, I felt, look, the only people having a party are actually the promoters who are coming and stuffing stuff down retail investors' throats. I think investors need to be very, very careful. And, it's interesting you mentioned 18 months of pause or 12 months of pause. Let me ask you a question. If you invested in a small cap index in December 2007, let's say end of December 2007, and you kept money in it for 12 years, say entire schooling of somebody's child, what do you think the return would have been? So 2007 to 2019, before COVID. Can you answer that?
I would not like to make that guess.
There's one volunteer wanting to answer the question. So there are two indices that were in existence during the entire duration. One is the small cap 50, one is the small cap 100. The small cap 50 over a 12-year period was down 30%. And the small cap 100 was up only 1%, right? So the point is, if you enter at the extremes, that's the kind of risk you're taking.
Hmm.
So all our enthusiasm for this small cap is based on the last 3.5 years or 4 years, where to your point, right, the index has gone up 3.5 times, which means you've got a 250% return. But I do think at this stage still, right, there is a lot of froth in there. There are lots of companies with very weak business models, with very aggressive accounting, trading at very rich valuations, and people need to be very careful.
Hmm. So, which are the pockets that warrant caution right now? Earlier the thought was risk hai to ishq hai, and that narrative hasn't really worked, every time, right? So, which are the pockets that warrant a lot of caution at the current juncture?
No, I think in small cap, you have to be selective across the board.
Across the board.
Yeah. I mean, you have to be very selective across the board. I mean, in every sector, I would say you need to focus not just on the reported earnings, but the quality of earnings. You need to go through the balance sheets. Are people piling up inventory? Are people, having very large receivables? What is the reported ROE? I mean, the reported ROE, I just did some numbers before I came here. If you exclude financials and IT where the ROEs are different, excluding financials and ROEs, the ROEs are sub 12% in the small cap space. So people are getting drawn in by looking at EBITDAs and stuff like that, where you also need to see what's happening on the balance sheet across the board.
Sure. Rahul, in terms of opportunities, which are the pockets that have the potential to generate alpha according to you now? Since you are of the view that, 18 to 12 to 18 months correction were pretty healthy, if one were to look at the space, where would you look at these opportunities in terms of alpha generation?
So just taking off from what Anish was saying about 2007 to 19, I think the only thing which has changed between that period and now, that I think the entire cleanup was happening in the corporate balance sheets and the banking balance sheets. And I think there was, obviously 2007 was an overvalued market. And so I think today, thankfully, at least on the macro side, things seems to be a little better in terms of the balance sheets, government balance sheet, banks balance sheet, and the company's balance sheet. Company's balance sheet for a variety of reasons, because capex has been low, and also I think the equity markets have helped them to shore up the balance sheets and reduce debt. So the cycles will not be as severe. That's one conclusion in terms of the down cycle, if and when it happens, that 18-month period or 24-month period, whenever that happens. So that's one comfort one has. Having said that, I think in small caps, it has to be more company specific. I think I will hate to get into themes now and discussion on themes, because they are done to death. Whether it's defense or manufacturing, these are very generalized themes. And it is just not going to work from now on. It worked in 23, 24. It has worked partly in the last 3 months. But I think those days are over when we can just, compartmentalize and say, okay, let's buy consumption, let's buy investment, let's buy defense and manufacturing. I think each company within manufacturing, because manufacturing is a big theme, right? It's a buzzword. But each company is so different that it is just impossible to bracket them together. And therefore, I think the starting point has to be valuation comfort now, today, especially today, wherever you have comfort. Wherever the expectations are low, I would go after that company. I'm not talking about theme here. And then essentially have some theory on why we think that company will surprise whatever the expectations are. I think that's the way to build the small cap portfolio today. It is not going to work if you just chase power or defense or manufacturing.
You can't ride the wave blindly anymore. That's what.
Not at all. Not at all. Not in large caps, not in mid caps, and definitely not in small caps.
Niket, coming to you, we already had a discussion on investment versus consumption, where panelists mentioned that there are various subsectors. But if I were to ask you about consumption in particular, there are quite a few tailwinds, starting from tax cuts in budget, RBI rate cut, inflation cool off, what have you. Would you expect, or would you say that consumption may emerge as the dark horse later this year?
No, I think on the low ticket size, yes, it's quite possible that it can emerge. But I think my fundamental premise is that the traditional side of consumption is not going to work. Like, for example, look at lights of FMCG. If urban salary growth is just 3%, I don't think FMCG is going to fly anywhere. And I think incrementally the new generation wants that their spending patterns are far more different than the older ones. So as you see more and more newer areas of growth, like for example, you look at food delivery businesses, you look at quick commerce, and Rajiv was saying about different concerts being sold out quite quickly. So I think the pattern of consumption is changing. It can really move more towards mobile phones. It can move more towards travel. It can move more towards luxury, so on and so forth. So I think what we have to keep in mind is that the consumption growth, spending patterns are meaningfully different than the last cycle or the last decade.
What would you do with shipbuilding companies? After defense and shipbuilding manufacturing per se, given the fact that post Operation Sindoor, we've seen all these stocks making quite a comeback. They're all rallying with a lot of gusto and everything. Stocks like I've just named one. We're not talking about particular stocks. For example, GRSC, shipbuilding company, orders are flowing through. Stock is doing well. But would you be worried about valuation froth there? Because ultimately it all depends on execution going forward, right? We're all betting on what could happen in the future rather than what's there on the books now.
So the way I'd address that is, our belief at iPro is always that if you like something at 100, you should like it less at 200, right? So after things have moved up, you should be trimming. I'm not talking specifically about shipbuilding. I'm just saying in general, because that means the good news, a lot of it is already in the price. So that's our general approach, right? We work contra, and stuff that has done well, we would generally like to exit, like to trim in general.
Sure. I have a question then. Niket, we've seen small cap funds, mutual funds deliver phenomenal SIP returns, turning a 20,000 monthly SIP into 90 lakh in a decade, so to say, with 20 to 25% annual returns in top funds. Given the current environment of rich valuations and earnings downgrades, do you believe this kind of compounding story is sustainable in the next decade? Where do small caps really stand in this, trillion-dollar AUM dream?
Well, I think from a return standpoint, it's very clear that next 1 year, one really needs to mellow down their expectation. But it also depends on how your portfolio construction is. If you run a portfolio with 50, 70, 80 names, it'll be difficult for you to kind of generate that kind of returns. But if you run a portfolio where, say, a small cap portfolio where you're running with 30, 40 names, and if you get few names quite right, it is still possible to at least get closer to those numbers that you just talked about. So I think it's all about individual stock picking abilities when it comes to small cap rather than mid cap and large cap. It's a little more generalized. But I think small cap is extremely bottoms up idea. Are you ahead in the curve? Are you ahead in the cycle? Really matters. If you're late in the cycle, frankly, you can't participate in small caps.
Rahul, how does one really spot red flags? You're taking a bottoms up approach. How would you look at red flags, or how would you look at spotting red flags early on? Because you've had cases, especially for small cap companies, where corporate governance has been an issue, right? So, what makes you cautious, and what is the red flag that you really watch out for while selecting a small cap company?
Well, I think the biggest red flag before corporate governance always is the business model and the sustainability of it. We've seen multiple companies which do well in a window of 3-4 years, and then something hits them, either disruption or competition, or the fact that they were just protected and they were just a below average company, right place, right time kind of a company, which did well in that 3-4 year period, 5-year period. And the mistake which investors end up making is to give that a very high multiple, that limited window earnings. It's happening. It happens in all the cycles. It will happen again. So that's the biggest red flag for me, more than corporate governance, because that's something which we should predict, and we are capable of predicting. In terms of corporate governance, I think there are multiple layers to it. Obviously, it starts from how your board is represented, what kind of compensation you're giving, then to the related party transactions, and also to the cash flow. I mean, major thing is obviously cash flow, because whatever you do in terms of cooking up your books ultimately shows up in cash flows. But it will require a completely separate discussion on corporate governance. There are multiple layers to it, as I said.
That's true. Anish, just want to ask you about small cap funds. It requires 65% of allocation to small caps, right? They are highly sensitive to market volatility as well. In light of the growing geopolitical risks and valuation concerns as well, how should SIP investors in small cap funds think about risk management today?
So look, if you've had a SIP for a long time, right, then it's okay in my view to continue with SIPs. But what worries us is that people open SIPs in funds that have done well, or sectors and schemes that have done, or themes that have done well at the at high levels after they've done well, and then they get nervous after they've corrected. So look, I mean, if you're a financial advisor, right, and if you are confident that the client will stay invested, then it's okay to sort of have the confidence that the SIP is okay. But if you're worried that this guy has come in, he's saying he'll do an SIP, but I really don't know whether he'll stick in after 6 months, right? Then you're probably better off advising him to stick to a safer fund.
Sure. We're kind of running out of time, but I would just want to pose this question to Niket, and then I'll have one question for all of y'all. Niket, we know that the markets have been navigating the geopolitical risks quite smartly, if I may say so. Today as well, I'm just talking about today's market action. We saw very smart outperformance, by both the mid and small cap indices. What is it that stands out as a key risk for small caps? And do you think small caps are vulnerable to sharper drawdowns if at all there is a correction
Always, right?
around the corner?
Always. So whenever there is a significant market correction, or whenever there's meaningful earnings downgrade in the system, or there's liquidity tide, you do see small cap having meaningful drawdowns. It's kind of played out every cycle.
All right. Okay. So as I wrap, one question to all of you. I know you guys said that, you won't be selecting themes or whatever, but, from a 3 to 5 year standpoint, would you be able to pinpoint one particular theme that could do well?
Yeah, I mean, I'll give you a theme which might sound very boring and very anti.
Boring is good, isn't it?
So healthcare is a theme which I like because, and I'm not talking about pharma here, I'm talking about healthcare,
Hospitals
because
and
that's one sector, if you think about very top down, that's probably one sector where there is a demand supply gap in India. I mean, any other sector demand supply gap gets filled very quickly. Look at quick commerce, or look at the new businesses also. So that's one area where there is a demand supply gap. Market is fragmented. There is pricing power. So you won't want to compromise in education and health. You don't want to compromise. So there is a pricing power, and I think the opportunity to basically reinvest your cash flows into 20% ROE businesses can be there for not just 3 to 5 years, 10 years, because we have to look beyond the demographic dividend story, which we have all grown up investing. Very soon we will be talking about healthcare and insurance in 5 years, 10 years, and not consumption. You can take it from me. And therefore, I think healthcare is one sector where for next 5, 10 years, I would like to pick up that as a theme.
Sure. Healthcare for Rahul. What about you?
So I'm glad you made the question 3 to 5 years, because that's an economic cycle. I hate to predict things beyond this cycle. No, but I think the economy is still doing well. It's recovering. So I do expect domestic demand to remain healthy. So I would pick domestic cyclicals, which includes capital goods, cement, financials, but selectively, and autos, right? So that's a domestic cyclicals theme as opposed to an export-oriented theme. Domestic, not cyclicals.
Okay.
Yeah.
What about you?
So I would think consumer discretionary is something that I would continue to like. Within healthcare, as he rightly said, a little more minutely, I would really look out for GLP-1's ideas. I think India is going to launch GLP-1. It goes generic next year. I think it will have significant ramifications on multiple sectors, from food delivery, food, beverages, insurance, multiple sectors will have significant ramifications. And last but not the least, manufacturing, within manufacturing, more on wires and cables.
All right, so those are the themes to really watch out for. I would like to thank you all for joining us this evening and sharing your insights. It was a pleasure. Thank you. Big round of applause to the panelists. Well, with that, we wrap up the fourth edition of the Moneycontrol Mutual Fund Summit 2025. It's been an evening of sharp insights, meaningful conversations, and a shared vision for the future of India's mutual fund industry. A big thank you to all our speakers, panelists, honorees, guests, and most importantly, to you, our audience, for your time and engagement. We are also grateful to our partners for making this summit possible. Presenting partner HDFC Mutual Fund, powered by partner Axis Mutual Fund, knowledge partner K Fintech, event partners Motilal Oswal Mutual Fund, Mirae Asset Financial Services, Tata Mutual Fund, and PPFAS Mutual Fund, and associate partner Reliance Industries. We hope this evening offered valuable takeaways for your investment journey. Let's now proceed for dinner. Good night and take care.
Welcome everyone to yet another edition of Plain Speak podcast. I'm Shivani Gupta, and joining me today is a special guest, Salvatore Babones, Associate Professor at the University of Sydney, but not really someone who needs a lot of introduction as far as intellectual circles in India is concerned. His writings, his papers have been discussed quite hotly in India, and I have had the privilege, Salvatore, of speaking to you on some of those. Many thanks for joining us here on Plain Speak podcast.
It's great to talk to you.
Talking today about Salvatore Babones' new book. It's titled Dharma Democracy, or as we in India will call Dharm Democracy. It's released internationally. It is awaiting its release in India later this year. Very interesting title. And thanks a lot for sending me the advance copy. So I've actually read his book that is yet to be released in India. This book ends with the line, "Discovery of Bharat is discovery of Dharma itself." And of course, the title kind of gives you an idea what this is about. This is about India. This is about Dharma. This is about democracy and how the two intermingle in India. So let me begin by asking you, Salvatore Babones, what is a Dharma democracy? Why this book? Why now? And what got you started?
Well, in the simplest terms, to quote Sarvepalli Radhakrishnan, Dharma is duty, a democracy based on duty. But more deeply, the reason the book is titled Dharma Democracy for Western audiences, this is the international edition, is to communicate to them the main finding of the book, which is that Indian democracy owes its survival to the structure of Hindu civil society in India. We've known for years that democracy depends on having a strong horizontally integrated civil society where people come together in mutual associations of all kinds. In the West, however, religion has been categorically excluded from civil society because religions in the West are all top down. Of course, the Hindu faith in India is not top down. There's no pope, there's no shared doctrine that everybody accepts. Instead, religion is very horizontally organized across society. People from all walks of life can go to any temple in India, can subscribe to any variety of Hindu faith, can walk in anywhere and do puja. They have temples in their homes. Civil society, a religiously infused civil society in India, at the time of India's early democracy, that is, the formation of Indian democracy during the independence struggle and in the mid 20th century, that was organized horizontally, but it was suffused with religion. And because it was suffused with religion, Western theorists have never noticed it was there.
In fact, the contention that you make in your book is that India is an outlier. India's democracy is an outlier. Not only is it different as far as Western democracies is concerned, because you talked about religious civil movements that actually created the mindset of a national identity or nationhood, or the citizenry that we speak of today was actually created by civil movements that were largely religious and largely Hindu religious movements. But you talk about how democracy so far in the world has been Western, has been industrialized, has been of highly educated or literate societies, and of course have been rich societies. And India is none of that. India is the poorest country, not only to become, but also sustain to be a democracy. And that, you think, is a model that should be studied, because in post-colonial world, not any other democracy survived but India.
I should be clear, the weird acronym is not mine. I didn't invent it, but it's a very good one, and it describes Western democracies. India is almost literally the only post-colonial country from the wave of decolonization after World War II that started as a democracy and remained a democracy throughout its entire history. Now, even if we want to talk about a wobble during the emergency in 1975-77, then we can say India is the only one that came through its first major crisis and emerged with a democratic solution instead of emerging with a military takeover or some kind of dictatorship coming out of its first major crisis. Now, there are a few other very small island countries that became independent very late that you could say, well, they became independent in 1982 and remained a democracy. But that's not, when we talk about the wave of decolonization, we're really talking about the 1950s through the 1970s. India is the one. It's the exceptional case that remained a democracy. And so we should be looking at India. And again, I come back to this theory that it's the structure of civil society in India, which was distinctive from virtually every other country. in the world, or every other new country in the world that sustained Indian democracy first through its independence era and then through its ultimate crisis during the emergency.
I want to ask you, you talk about what are the ingredients that are required to be a democracy and to be a sustainable democracy. And nationalism or a national identity is one of those. But, nationalism has become a much maligned word in the world now.
Yeah. There are two major traditions in thinking about democracy, in this political sociology of democracy. The dominant tradition today is Weberian. It comes from the work of Max Weber, and it's very focused on formal institutions, things like constitutions and formal laws. But there is an older and more sociological tradition that comes from the work of Emil Durkheim, the founder of the entire field of sociology, that saw democracy as requiring a shared sense of community. People have to believe they're part of a democratic community, believe they're part of a community before they can accept democracy as the way they run that community. After all, why should you accept losing an election? You accept losing an election because you're part of a community that accepts the norms of the community as a whole. Now, that's been different in virtually every other post-colonial state, which every post-colonial state started with a democratic constitution. Even places like communist China and Vietnam started with democratic constitutions. What they didn't have was a shared sense of nationhood. Now, that problem is even more severe in African and Middle Eastern countries where there was no sense of national identity at the time of independence. The nation had to be created, and it's taken so long to create a shared sense of national identity that people are unwilling to accept the outcomes of elections. I mean, let me be clear. Most democratic breakdowns occur along geographical or class or tribal lines. There's an election in a country that has two major tribal groups. One major tribal group wins the election. The other major tribal group refuses to accept the result, and there's a civil war. That's the typical story of third world democratic breakdown. Now, of course, that didn't happen in India because although were many proto-nations in India, I mean, we could imagine an India that could have emerged with Bengal as a country and Gujarat as a country and Maharashtra as a country and Tamil Nadu as a country. That didn't happen because the civil society, the nation-building efforts that occurred in the late 19th and the early 20th century by many groups in India, most famously, of course, the Indian National Congress, but also many, many other groups working to forge a unified sense of identity across all of India. Now, the key is those groups were overwhelmingly Hindu in character. And as a result, although they were not trying to build a Hindu Rashtra,
Hindu state,
they weren't explicitly Hindu. The fact is their members were Hindu, and they were perceived as Hindu. The Muslim League perceived the Congress as the Hindu party, not the Mahasabha. They perceived the Congress as the Hindu party. Now, the Congress didn't perceive itself as a Hindu party, but the fact is it could never attract Muslim votes until after independence.
In India, we have had this debate. In fact, curiously, current Congress party, whose de facto head and face is Rahul Gandhi, has often become under criticism for trying to project India as just a union of states, right? Just an amalgamation. Do you think that would be the wrong categorization of India, that there is indeed a strong nation, a nationhood feeling, sentiment? That's the only reason why so many linguistic identities have stuck together in this geographical constraint?
There's an overwhelming sense of nationhood in India. All we have to do is look at the reaction to the Pahalgam attacks to see that India is a unified nation. There are, of course, linguistic groups, there are national groups, there are caste groups, and there are fault lines across all of these. And there is linguistic nationalism, but it's at a very low level in India. And it's mainly restricted to wanting things like, language rights in schools. There's no hint of a movement in India today of any kind of real national separatism of a group in India that wants to become a separate nation. Groups in India identify themselves as interest groups within society, not as separate nations. Now, that's in contrast, of course, to the way the Muslim League characterized Muslims in India pre-independence, and that Muslim intellectual characterization of Muslims. And I want to stress, it did not come from ordinary Muslims. It came from the Muslim intellectual class pre-independence. That insistence on a separate Muslim nationhood in India led to a division of India, obviously leading politically to partition along religious lines that didn't have to occur. It doesn't happen now. Muslim Indians show no sign today. I mean, Muslim Indians may fight for rights within India. Muslim Indians may want greater recognition. Just like every other group in India, they may want more government jobs and more reserved positions in universities. They don't want a separate country, right? So there's no sense of any kind of nationalist separation in India. India is a unified nation and has been for 75 years.
You know, before I come to the question of the Muslim Indians, and you actually also point out to the fact which struck to me for the very first time, the use of the word internationally and even amongst Indian, let's say, Muslim intellectual class or political class of Indian Muslims. That's an often repeated term used to describe Muslims living in India. Contrast that to the term that you are using, Muslim Indians. Right. So Indian Muslims, the term itself, Salvatore Babone has mentioned in his book, kind of keeps the Muslim identity first rather than the term that should be used ideally, which is Muslim Indians, that emphasizes on the Indian identity. But, you know, before I come to that, because you've talked a lot about the importance and the fate of Muslim Indians and why that is crucial for India's unity and integrity and democracy in future, I do want to ask you, on the issue of a nation state itself, some may try to say, oh, India wasn't even a country before 1947. We've seen those debates happening in India. And now there's a new debate about how India is a civilizational state. Do you agree that that is indeed the case, that India is a civilizational state?
No, I don't think a civilizational state argument, it's very romantic. It appeals to a lot of people. I don't think it makes analytical sense. After all, arguably the Northeast is not part of the civilizational core of what is India, but no Indian would give up the Northeast. You know, on the other hand, if you take civilizational state expansively to include the Northeast, well, certainly then Pakistan and Bangladesh should be part of the Indian state, as should Sri Lanka. Now, you could say that India is a civilizational nation, and that would have a little more meaning to it. But it's certainly not a civilizational state. I mean, look, India is a nation state in that people have an overwhelming attachment to the Indian nation, whatever their religion. And we have good, hard statistics on this, that it's not just Hindu Indians who feel that they are strongly Indian in national identity. It's Sikh Indians, Muslim Indians, Buddhist Indians, Christian Indians. There's virtually no difference by religion in how people view their national homeland. Indians are Indians. The civilizational state argument is, I think, driven by a lot of jealousy that people have called China a civilizational state. And if China gets to be one, why can't India? But I think it just doesn't make empirical sense.
Okay, let's talk about the issue of Muslims that you've talked about in your book. You've kind of projected the integration of Muslim Indians, which you feel is incomplete, as a big issue looking forward for India, and could be crucial not just for India's unity, but even whether it continues to be a democracy. Why is that? Why do you place such great importance to that one issue in your entire book?
Look, it's a huge issue because India has a large and, let's face it, poorly integrated Muslim minority. I say poorly integrated because levels of residential segregation are extraordinarily high in India. Levels of intermarriage are extraordinarily low in India. Now, that reflects a lot of personal choices, but it also means that Muslims are not represented in key Indian institutions. I mean, much has been made of the fact that the BJP doesn't have a single Muslim member of parliament. And okay, that's a problem, but you know, only 2.5% of India's Muslims voted for the BJP. So maybe it's not such a big issue. On the other hand, 25% of India's, I'm sorry, 2.5% of the BJP's votes came from Muslims.
Yes.
On the other hand, 25% of the International Congress's votes came from Muslims, yet only 8% of its MPs are Muslim. Now, it's not just in parliament. That's the easiest one to count. But if we look at, you know, top levels of media, top levels of the corporate world, the only place where we see maybe Muslim overrepresentation is in Bollywood, Bollywood in sports, perhaps. Now, for me as an American, that's interesting because those are the exact same places where we see African-American overrepresentation. Now, Muslim Indians have never faced discrimination on the level that African Americans used to face in the United States. But nonetheless, there is a serious deficit. Now, that deficit's not the fault, quote unquote, of Hindu Indians. In fact, if anything, it's the fault of the Muslim League. At the time of partition, 94% of Muslim ICS and IPS officers, the Indian civil service before partition, 94% went to Pakistan, despite the fact that 50% of them, roughly, lived in areas that would become independent India, right? So the Muslim intellectual class, now, we don't have numbers for lawyers, for doctors, for philosophers, but we do have these firm numbers for Indian civil service and Indian political service officers. So we know that virtually the entire Muslim political class decided it was going to move to Pakistan, even if they lived in areas that became independent India. They left the middle class and poor Muslims behind in India without an intellectual elite. Now, these things take generations to repair. That repair has not yet happened in India. Levels of Indian administrative service applicants from Muslim households are still very low. Levels of higher education among Muslims are still very low. Now, levels of elementary education are just roughly as high as for Hindus. Levels of income are roughly as high as for Hindus. So there's not a broad deficit faced by Muslims in India, and our indices of discrimination show there's very low relative levels of discrimination against Muslims in India. It's simply not there. What we do have is a legacy of partition that the political and intellectual elite of unified Muslim India pre-1947 left and went to Pakistan. And we're still
I got a
dealing with
sense.
that
I got a
after
sense from reading your book that you kind of do place the blame or the onus on Indian Hindus,
Yes.
or Hindu Indians to do more in this regard. And,
Not the
Indian-
blame,
but the
the
onus.
responsibility.
Yes, the
Yeah,
responsibility.
the
Why
onus.
is that? Because in India, this is a prickly point. This is this is what we discussed today, right? And I think you have mentioned the fact that there is a sense of repression of the Hindu identity or historical wrongs that were not accepted that has led to this sort of a aggression from the Hindu community after 5 decades or 7 decades now of Indian independence. But you do seem to suggest that both the BJP as a party that projects itself as a party of Hindu interests or Hindu identity, and Hindus themselves have the responsibility and onus. Why is that?
Because if an organization, let's say News 18, or wants to organize a conclave, if most of the people at the organization are Hindu, and the people they know who are Hindu, and if most of the people in leading positions are Hindu, obviously the event's going to be mostly Hindu. And it's not just News 18. I mean, I first became known to many Indians at an India Today forum, and I pointed out to their forum that despite India Today professing to be a very liberal organization, there were hardly any Muslims at their conclave.
But
Now,
doesn't
this
this perpetuate the partition mindset that you can only have Muslim leaders or Muslim representation that can truly be justified for Muslim population?
Look, it has to start somewhere. If Hindus, so when I say responsibility, I mean that if Hindus take no special action to intentionally be more inclusive of Muslims in institutions that are Hindu dominated, not exclusively Hindu, not in any sense intentionally Hindu, that are just Hindu dominated, if no explicit effort is made, then we're going to look out 50 or 100 years and we're still going to see relative Muslim underrepresentation. That's bad for India. That's bad for that's bad for the sense of Indian Muslim belonging in India. It's bad ultimately for Indian Hindus. Now, it's not a blame. There's no one. Indian Hindus are not to blame for the fact that the Muslim intellectual families voluntarily left the country after 1947. But if anyone's going to fix it, the only people who can fix it are Hindu Indians. And that's why I say it's their responsibility. And if you go back even to the work of Swami Vivekananda, everyone loves Swami Vivekananda. Nobody wants to listen to his mandate. Swami Vivekananda wanted that kind of inclusion. It's not a revolutionary idea that people who want to have a better society, want to have a more inclusive nation, should do their part. Yeah, it's not their fault, but they should do their part to help make their nation a better place.
Hindu community. Yes, go ahead.
Even the RSS recognizes this. Now, they haven't done let's face it, they haven't done a very good job of it, but they try, right? And so when even the RSS, when even Mohan Bhagwat is trying to be more inclusive of Muslims, can't media organizations and political parties and civil society groups, can't they do their part as well? And if they did, everybody will have a better India in 40 or 50 years.
Yeah, but you do also mention that there is a certain partition mentality that has been perpetuated in India. That India, its policies sometimes, its politics, and even the way that it is run, sometimes perpetuates the partition mentality. You also talk about the fact that if Indian Muslims who were left behind or who stayed in India after partition, about 10% of Muslim population, continued to do well. It has increased to 15, some would say 20%, new census is going to happen. Then what was even the point of partition? These are some of the things that are discussed today. And on the point of whether Hindus can do more, the angst of the Hindu community in India seems to be that more is asked of them and concessions are asked of them to make someone feel more included, while there could be a problem of mentality on the other side as well.
Well, I point out in the book that some very brave, I think, Muslim intellectuals have also made the same argument from the Muslim side, that Muslims, instead of forming their own organizations, for instance, there's been a huge controversy over the Waqf boards, instead of having Waqf boards that exist to provide charity only for Muslims, that they should be providing charity to everybody, that their organization should be inclusive. After all, anyone can walk into a Hindu or a Catholic hospital in India, they serve the entire population. So why shouldn't Muslim charity also serve the entire population? That would serve to, again, better integrate Muslims into all of India. Now, the legacy of partition, if it's anyone's fault, it's Jinnah's fault. Muhammad Ali Jinnah wanted to be the father of a nation. He knew that he was never going to be the father of an independent India because that was going to be Gandhi. And so the only way he could be a father of a nation was if he embraced Islamism. And even though he was a fully secular Muslim, if he embraced that Muslim identity and tried to get a Muslim basis for a country, India was partitioned, in my view, because of the ambition of one man, Muhammad Ali Jinnah. Nonetheless, India was partitioned. And that's a fact that reverberates down through to today. It reverberates down in the structure of Indian society, which was vivisected at partition and is still suffering the consequences of that separation.
Yeah. On the issue of a partition mentality, or, sometimes the dissonance between Hindu and Muslim societies in India, you have actually mentioned the damage possibly that was done by eminent historians, or what you have called establishment historians. Yeah, they didn't quite recognize that there was, or they tried to gloss over certain aspects of Mughal or Islamic conquest and history in India. That has become a big pain point in India. How much damage do you think that did in independent India to finally be able to reconcile with history, with actual history, and move on?
Look, history should be honest, and there's nothing wrong with admitting the reality that Muslim conquerors in India treated their Hindu subjects very badly. And there's no doubt about that. The historical evidence is overwhelming. I'm not an historian, I'm not a medievalist, but just reading the accounts, there's simply no doubt that there was a extreme level of repression, temple desecration, forced conversions, conversion of temples to mosques. All of this happened. But that doesn't have to lead to bad blood today. And I use the example in the book of Native Americans in the United States. Now, the United States was literally fighting wars between white settlers and Native Americans until the 1880s. By the 1920s, when the U.S. Tomb of the Unknown Soldier was set up in the United States, a mere 30 years after the end of the Indian Wars, the greatest honor of all for martial valor was given to a Native American chief. And in fact, all the generals from France and from Britain came and paid respects to the unknown soldier, but the final item was a Native American war headdress that was put on the tomb, right, to symbolize that martial valor. Now, these were people whose parents and grandparents had literally been scalped by Indians, American Indians, not Indian Indians, who were now not only forgiving, but saying, we respect their extraordinary courage and valor. Now, in India today, it may sound crazy, but there are lots of monuments of Mughal India, and not only Mughal India, other Muslim empires that have fallen into disrepair, that are in disrepute. There's no reason why India can't valorize its Muslim past. I know that may be unpopular in today's political climate, but other countries have done it, and successful democracies have done it. How do you bring Muslims into India? The Indian national story? Well, instead of tracing the Indian national story as exclusively a Hindu story and one of Muslim repression and invasion of Hindus, tell the truth about it, that there were Muslim invasions, there was serious conflict, there was violence. Hindus won some battles, Muslims won some battles, but you know, Muslims were great warriors, and India can recognize and put, you know, it can have army colleges named for great Muslim warriors of the past and incorporate that into the Indian story. Now, you know, it can be painful for some to have these historical memories, but if other countries can do it, and for India, it's been a much longer time since this violence, India can do it too. And that's not me trying to tell you what India should do. That's me as a professional sociologist telling you what will make India a better place in 40 or 50 years. It's up to you if you want to do it.
Some would argue that that was exactly what was attempted. Post-independence, there was an attempt.
No, that was whitewashing.
There was whitewashing of history. There was valorizing of certain, characters like Aurangzeb that continues to till this date of Babur, and it hasn't been palatable for Indian Hindus. And instead of that, what should have been done is a real account of Indian history without whitewashing, the atrocities by some of these rulers. So I would say, I mean, this is my contention, and I would encourage people to read your book, that actually exactly what you're suggesting was attempted, but it was taken to such a level that it actually invited a backlash. And today we have history being one of the greatest battlefields of the Hindu right versus the so-called liberal Indian. But the other thing that you also talk about, as far as this integration is concerned, and this has also been discussed, is the desecration of holy Indian temple sites. One of them has been reclaimed, so as to say. Two other battles are going on. I'm talking about, of course, Kashi, Mathura, and Ayodhya. And this whole thing about how had the Muslim community come forward to say, okay, let's build a consensus on the most important sides and, relinquish those sides, it could have fostered some brotherhood. We know this history. It's a painful history in India where several civil groups actually thwarted those attempts by the Muslim community when Hindu and Muslim communities were trying to resolve these issues in the 1980s and 1990s. But you suggest that the Hindu right is also taking it too far, where some suggest that every temple that has ever been broken or taken over needs to be reclaimed. So I have asked this of many intellectuals today who write about this part of Indian history. Should we stop at 3 or 3,000 or 30,000? What do you say?
Both sides have taken it too far. On the Muslim side, there has to be a recognition that the holiest Hindu sites, I mean, the emblematic site is the Vishwanath Temple in Varanasi, that these should be the subject of an agreed civil transfer. There's no reason that Muslim Indians should insist that a nondescript local mosque that has no particular holy significance can't be given up. I'm sure if they were willing to sell the site, they could get a princely sum, which they could build a gorgeous new mosque that everybody could celebrate in Varanasi. And Hindu Indians could be returned one of the holiest sites in Shaivism and all of Hinduism. That would be a net win for everybody. And the Muslim religious clerical leadership is unwilling to make that compromise. They should make that compromise. On the other hand, when you get to figures like 30,000 temples have been converted into mosques, most of that number consists of village temples in villages that are now Muslim villages. That is, the villagers had a temple, the villagers converted to Islam. Whether they did so 500 years ago because they were forced to or because they voluntarily did it, no one is ever going to know. It doesn't matter at this point. What matters is the people in that village have been using that site continuously for maybe 2,000-3,000 years or more. And when those people were Hindu, that site was a temple. And now that those people are Muslim, that site is a mosque. And the idea that all of those village mosques would be torn down and have temples rebuilt there with no worshipers because they're in Muslim villages, they're in Muslim neighborhoods, that's similarly a non-starter. It's ridiculous. Now, how many holy sites should be restored to the Hindu faith? Some say 3, maybe it's 8. It's certainly not 300. There has to be some compromise, and the compromise has to come from both sides. The best thing for India is that it not come from the Supreme Court. The best thing for India is that Muslim clerics recognize that this is a reasonable compromise, that places that just don't matter that much to them should be sold at a fair value, allow them to transfer over to people who really care about the site, with fair compensation. And the Muslim side should take the credit for that. They should be heroes for that. It would make them among the most admired people in India if they voluntarily took this decision. So there's responsibility on both sides. I wouldn't lay all the responsibility at the door of one or the other side.
Right.
But ultimately, in the larger sense, I think the fact is that Hindu Indians really have to make the effort. And I don't mean the government. I don't mean that to repeat the hackneyed phrase that Muslims must have the first call on our resources. I mean the people, the civil society leaders have to make the effort.
You know, speaking of that political effort, if any, you have talked about BJP as a party, the Indian National Congress, the old and the new versions in your book, and you call BJP a particularly Indian phenomenon. No such parallel exists anywhere else. You also called the BJP the only true modern party in India. Please explain that.
There are no Yogi Adityanaths in Western democracies. It's inconceivable. The minister monk is inconceivable in a Western democry.
But Yogi Adityanath is a fairly recent phenomenon for the BJP. The BJP has existed for 50 years.
He is, but it's simply inconceivable. That said, the BJP is a fully modern political party. It's organized on a modern bureaucratic basis. It is fully leverages technology. It is to a great extent a meritocracy. No organization is ever fully a meritocracy, but it's recognizable in some ways as a political party on the model of the U.S. Republicans or Democrats. It's really not so different in the way it operates. What's different in India are family-run parties. That's typical of the third world. Third world's full of family-run parties. Every country in the third world. Caste-based parties are unique to India. Now, there are tribal parties in Africa, which is not so different from being a caste-based party. Linguistic parties, again, you can find those in parts of Europe, but they're very destructive. So Belgium is torn apart by linguistic parties, Flemish parties versus Walloon parties. And whenever you have a division in society that tries to categorically define people, you're either in this group or in that group. That's destructive of democracy because either one group wins or the other group wins. The BJP is a modern party in that it's no particular group of people. People like to call it, a Banya party or something, but its reach is far. Yes. Yeah, I mean, its reach goes far beyond that. It is a modern political party attracting people from all walks of life, and it tries to get, it'll shoot for trying to pry off 20% of the Dalit vote in a particular constituency, or it'll try to pry off 10% of the Muslim vote in a particular constituency. That's exactly what a modern political party like the US Democrats or Republicans do.
But why do you call it a particularly Indian phenomenon?
It's particularly Indian because it's that kind of religiously infused, but nominally secular party. Let's not forget the BJP is not in any way an officially Hindu party. It is maybe a little bit reminiscent of things like the Christian democratic parties in Western Europe in the mid-20th century. But in the West, religion simply is no longer a major factor in most countries in politics. And so the BJP operates in a very different social milieu. I tell Westerners all the time, the difference between Indian democracy and Western democracy is not the quality of the institutions. India has near identical institutions to Western democracy. Don't tell me about the Lichavi republics and their ancient democracies. India's democracy is a modern Western-style liberal democracy with an electorate that has 1/20th the income of a Western electorate and has 95% or 98% religiosity and is extremely traditional and conservative. All of that makes the electorate different, not the institutions different.
Yes. You've also talked about, actually, interestingly, talking about Indian institutions, they come under attack by the Indian opposition quite a bit today. But it's actually not the Indian institutions, for example, that stood up to Indira Gandhi during emergency, not very much. It is the Indian public psyche and its basic propensity for democracy that actually has kept India a running continuous democracy.
And the fundamental question in my book is, where did that come from.
Yes.
And thus the title, Dharma Democracy. It comes from the structure of civil society in India. And that's why Hindu Indians are much more attached, much more participating in Indian national institutions than Muslim or, depending on the state, even to some extent Christian Indians. Not because of differences in income or differences in education or differences in not even differences in religion. That's not the issue. The issue is that they've participated in the nation building project in a way that others have not, with the result that India is, a fundamentally Hindu nation supporting a fully secular Western style democracy.
Yes, and in that itself, also it is a little bit unique than other democracies, certainly from Western countries, but even otherwise in the third world, as you talk about. I want to ask
and
you.
It's not an, and
Yes.
it's like it's not an insult. I mean, throughout the 19th century, the United States was a fully Christian democracy. It was a Christian nation. It may be less so today, but it was. All European democracies arose in Christian nations. The idea that the nation would be religious while the state is secular is nothing unique to India, and it's not something that we can or should criticize India for.
Absolutely. And that realization, of course, is happening in India. Indian intellectuals themselves are talking about how, the Hindu values are consistent with India being a secular state, and a democratic,
Absolutely.
constitutional, secular state. I want to ask you, though, do you think India would be secular if it wasn't primarily a Hindu society?
Look, that's a counterfactual that's virtually impossible to say. It certainly would not be secular if it were a majority Muslim society, and we know that because every majority Muslim country in the world is, or to some extent, or has been an Islamic republic. So it's clear that there is a problem of compatibility between Islam as a dominant religion and democracy. Now, that's, again, I want to stress, that's not a problem between individual Muslims living in democracies. Individual Muslim Americans are well integrated into US democracy. There's no pressure for an Islamic state in the United States. And similarly in India, Muslims, although they're not well integrated into the nation, they're full participants in Indian democracy, and there's no pressure for the creation of a Muslim state in India. So it's not individual Muslims, it is the fact that Muslim-dominated institutions have not typically behaved in ways that are compatible with democracy. And again, we see that in things like charities. It's a very visible area where Christian charities and Hindu charities have a principle of serving all, no matter what religion they come from. Muslim charities overwhelmingly tend to serve only Muslims. And that's a problem.
No, speaking about this whole Waqf issue that is obviously hotly debated in India, you have touched about UCC as well in your book. Why the party that is actually called communal, which is the BJP, is pushing for a UCC, which is a liberal ideal, but the parties that call themselves secular in India are actually batting for no UCC or civil code in India. But, I will encourage viewers to go through your book for that. I have a final question to ask you, Salvatore Babones. You say that there a more humane and capacious understanding of India's Hindu civilizational inheritance is required to kind of, integrate Muslim Indians more and build a more inclusive, more integrated society. The thing that we talked about, that you have put this particular focus on the integration of Muslim Indians as a key for India's survival. What could be a more humane and capacious understanding?
People always have a choice of which of their possible histories they want to focus on, which of their possible religious principles they want to focus on. I mean, if Indians focused on the legacy of Swami Vivekananda, if Muslims focused on the legacy of Hazrat Inayat Khan, there would be a much more acceptance of the other, and much more respect for people of other faiths. Of course, people can also embrace exclusivist religious traditions and exclusivist national traditions and fight with each other. It's really up to Indians whether they want to embrace inclusivity or exclusivity. To date, the majority of Indians have embraced inclusivity. Not everybody, but the overwhelming majority. And that's led to India hanging together as a nation in ways that I want to stress. India has the same per capita GDP as the African continent. Count the number of successful democracies in Africa. Right? There are none that have been successful over the long term. Even South Africa is showing serious signs of division on a tribal basis, clearly on a race basis, on a language basis. India is the one country of its income level that succeeded as a democracy. That's got to be down to the distinctiveness of Indian civil society. And the only real factor that distinguishes India from virtually every country in the world is being a Hindu majority country.
Yeah, absolutely. In Salvatore Babonis's book, Dharma Democracy, he obviously talks a lot about these indices, the democracy indices, the the freedom of religion indices, and how they've been politicized and actually are based on data that can be ripped apart. This is something I have discussed with Salvatore Babonis earlier as well, as far as his reading into the Pew Research data itself is concerned, what the headlines say and what the rankings say versus what the data actually says. Salvatore Babonis, you do of course take on these freedom indices, these reports that usually talk about India as an autocracy, electoral autocracy, or talk about declining freedoms in India. And you always find that these are not really true to what is the ground reality in India.
Look, in the book, I have 2 entire chapters dedicated, oh, there's the book, dedicated to the indices and understanding and unpacking the indices. One on the democracy indices and one on the freedom of religion indices. The fact is, categorically, all of the claims that we're able to objectively verify turn out that India actually has much higher levels of freedom than claimed by the indices, and in fact, higher levels of freedom than Western countries. I'll give you just one example. I do a serious deep dive into academic freedom, trying to find the number of academics who've been fired from their jobs for political reasons. I compare Australia, New Zealand, and the UK, which have a very similar system to India. Now, in Australia, New Zealand, and the UK, in the last 5 years, there have been 6 academics unequivocally fired. I don't mean resigned or left honorary positions. I mean fired from their paying positions and lost their livelihood due to their political positions. 6 of them. In India, we find only 1 unequivocal case, 3 who resigned under pressure, but they're all questionable cases. We're not really sure. Now, if you even accept all 4 of those, despite the fact that 3 of them are at very obscure universities, these are not, we're not talking about JNU and Delhi University or the IITs. Even if we accept that 4 at face value, India has a population of 1.4 billion compared to just 100 million. So that would imply that rates of academic dismissal in Western countries are some 20 times higher than in India. In other words, India has one of the best protections for academic freedom in the entire democratic world. It's completely at odds with the rating of academic freedom in India, which according to the Varieties of Democracy Institute is worse than in Gaza under Hamas before the current war. That's just an incredible claim that Indian academics suffer under more challenges than under Hamas in 2022. Inconceivable.
Absolutely. And you can read more about this in Salvatore Babonis's new book, Dharma Democracy, ripping apart all of these freedom, religious freedom, academic freedom, nonsense that is really spewed against India. That is all headline material, but very little on ground. And there's really no source material that is often available to make many of these claims against India. Once again, Salvatore Babonis, always a pleasure to talk to you. Thanks a lot for joining us.
Thank you. Good morning. Namaskar. There's a running joke in the news media that Elon Musk is the co-president of the United States. It is not true, but it is relevant to our session and our discussion because we are talking about the intersection between governments and businesses and how they shape our world. We are in the middle of a major geopolitical realignment, and corporate entities play a crucial role here. You see Western companies banding up with Western governments. You see Chinese companies banding up with the Chinese regime. So it's not just country versus country anymore. It is a country plus its companies versus others. And this is not necessarily new. You may have heard of a certain East India company and you know how that played out. But in today's context, how will this new equation impact big power play and big power rivalries? That's what we'll discuss. We have a crack panel here. Good morning to all of you. Joel Kaplan, let me start with you. The US administration, the new US administration, prefers fewer social media regulations, even when it comes to fact checks. And companies like Meta have responded to this by ending third-party fact-checking. But in Europe, social media regulation is a top priority. So is that going to be the future of platforms like Meta, where you don't have a uniform policy or principle, you just operate or respond to the country that you're operating in?
Well, first of all, Palki, thank you for having me on the panel. It's an honor to be here with the Honorable Minister and the other august guests. I mean, there is obviously been a change in administration in Washington, and I would say the Trump administration does have a very different orientation towards social media companies, but towards American companies and American tech in particular than the prior administration did. And while it's true that President Trump and his administration are much more interested in expanding the freedom of expression online than the prior administration was. I actually think that the bigger change, at least that we're experiencing as a company and as a sector, is that we have an administration in Washington that is interested in promoting American technology, advancing Western values in technology, and honestly defending American tech companies against what they perceive to be a discriminatory regulation targeted at them. That's something we've seen particularly in the EU over the last number of years, and I think it is a change, and one that we're experiencing and are candidly quite pleased about, to have an administration that's prepared to defend American values online and American companies, again, against what we and they perceive to be unfair targeting. When it comes to the changes that we've made recently around fact checking, we found that we know that people don't want to see misinformation on our platforms. It's not good for us. It's not good for them. But the system that we had put in place a number of years ago to deal with a third-party fact-checking program just proved to be too prone to political and partisan bias, and had destroyed at least as much trust and credibility as it had built. And so we decided to replace that system with another approach that leverages the many different voices and people and diverse perspectives on our platform, a system called Community Notes, which is sort of like, you can imagine, think about Wikipedia and think about the way other platforms have relied on community-based systems to provide more context and more information. We think that's going to be really promising.
But will you stick to that even in countries where there's a repressive regime or stifling of free speech or human rights?
Well, we're starting it in the United States. It's rolling out in the next couple of weeks. We're going to take our time to make sure that we understand how it's working and that we get it right. And then we'll look to expand to other countries. And of course, we'll take into consideration the different information ecosystems and news ecosystems that exist in different markets and different countries. And we'll make sure that we do it deliberately and carefully.
Pier Roberto Folgiero, protectionism clearly is creeping up across the world, with the US becoming the unexpected flag bearer of it. How much of an impact will these trade and tariff barriers / wars have on trade volume and global trade?
Good morning, everyone, and thank you for this invitation, and I'm very honored to be at the same panel with the minister. But let me say that what we are living is the geopolitics of shipbuilding. You know, we are shipbuilders. We build ships in 5 continents. But all of a sudden, the world realized the geopolitical power of shipbuilding. And, you know, Western countries abandoned shipbuilding something like 20 years ago. So the vast majority of ships in terms of tonnage are built in between China and Korea. So all Western countries are rethinking the strategic importance of this industry. US, first of all, and China is somehow having a long-term view on the importance of the maritime economy, starting from shipbuilding as a building block, moving to logistic business, all the way to owning port infrastructure. Now it's time to rebalance all this. What remains in Western countries is technology-driven shipbuilding. So those kind of ships in which the payload is making the difference. So when the cost of a ship is driven by cost of the steel, cost of the labor, and cost of the energy, it was lost. When these three components accounts for 80%, is lost. When the payload is the most important part of the total, then we can be still relevant. So this is this new era. We believe that this know-how in technology-driven shipbuilding is the way to think of the future shipbuilding. So that's why we are very interested in joining forces through a common geopolitical platform, but joining forces in order to go for a kind of renaissance of shipbuilding in a way that is instrumental to this new geopolitical order. So this is our focus, and we believe this is the way ahead.
I'll come to shipbuilding in particular in a bit. Let me get Marianne Dimarchi in the conversation. SWIFT describes itself as a neutral entity with a global character. So I would say this model is based on trust and consistency. Yet SWIFT has become a tool of Western foreign policy, as seen in the war in Ukraine with Russian banks being cut off. Would you say that undermines your claims of neutrality?
Well, thank you. Good morning to all, and thanks for your question. Well, indeed, I mean, SWIFT is a global cooperative. We are headquartered in Belgium, so under EU law, but we are present in more than 200 countries. We are connecting the world, the economic and financial world, actually, through more than 11,500 financial institutions all across the world, including, of course, in India. And we are also completely currency agnostic, supporting 150 currencies and so forth. So this is our global nature. We are really keen on being seen as a digital infrastructure, as a public good. Indeed, I mean, we are so based in Europe. There has been sanctions imposed on us and other companies, which we had to apply. But we are really committed to maintain and to show to the world our global nature. We are evolving also our corporate governance to make it more inclusive. And we are, as I said, I mean, we are here, we are a non-profit company. Okay, and as a non-profit company, we're not maximizing on revenue. What we are maximizing on is to ensure that we maximize the value of what we offer to the global ecosystem. We are here to try to resolve some complex challenges, so building the future of tomorrow or the future of finance of tomorrow. Given what you just said, I mean, geopolitical tensions, the global growth of digitization, embracement of digitization, which all this can have pros and cons, but can also increase fragmentation.
But can you still claim to be neutral, was my question.
Yeah, we are. I mean, we are a neutral company, but we have to be headquartered somewhere. And, so we are incorporated in Europe. It's all the banks in the world have decided, it was 100 banks at the time, now it's 11,500, have decided to incorporate this organization in Europe, and we have to follow European law. But as a company, we have a board which is very representative of many different regions. We are evolving that corporate governance to be even more neutral and representative of all parts of the world. We are present in all the world, and what is really important is not necessarily this part, if I may. What is important is that we really need in these geopolitical tensions, new proliferation of payment systems here and there, be it instant payment systems, central bank digital currencies, other systems that want to be built, fine. I mean, it's good and it gives opportunity. But if they are not connected and interoperable, you risk financial fragmentation. And financial fragmentation is really impacting global growth. There's many research. The last one is from the Economist that has measured that if financial fragmentation, and I will come back on that to explain why, financial fragmentation can hit the global growth, global GDP, up to 6% of GDP in 2030, if fragmentation accelerates. 280 million jobs would not materialize because of this, and no single country would benefit from it, in particular those that rely on financial flows. And why is that? Because we need to realize that the economy is not just policies and stuff. It's just, also pipelines, systems that are interconnected, that are the backbone of the economy, the arteries of economy. And if this is not functioning well, the economy suffers.
Right. I would have asked you, Dr. Jaishankar, if we'll help SWIFT find a new headquarters. But on a more serious note, I want to ask you, historically, India has shied away from weaponizing trade and financial institutions. And you yourself have said that we are not in favor of national sanctions. But with the way the landscape is changing, and you've heard all the other players speak, do you think that trade barriers and tariffs and tech sanctions or tech restrictions have a place in our foreign policy, or should have a place in our foreign policy?
Before I come to that, I just want to say, I can see there are really three capitalists sitting on this side, but I'm impressed to be seen as a commissar. It's a term from my youth, and I was quite amused to see it being used in this age, but I take it as a compliment. Now, your point, tariffs, sanctions, what's happening, export controls. I think whether we would like it or not, they are a reality. Countries use them. In fact, if one looks at the last decade, I would say we have seen a much greater weaponization of pretty much any kind of capability or any kind of economic activity. It could be financial flows, it could be energy supplies, it could be technology. This is the reality of the world. Since I take the world as it is, we have to negotiate our way through that and see, how best we can do for our own country. Because at the end of the day, for a government, for a commissar of the government, you fight for your business. You fight for your business because you're fighting for your employment. You're fighting for your comprehensive national power, of which business makes a very important contribution. I think today the lines, dividing different domains have eroded. I think overall, if you see in international relations, I think it's a less restrained culture today than it was, say, a decade ago. And that's something we all need to factor in.
Does it bother you, the blurring lines?
I'm not, I wouldn't say it would bother me because I've seen its evolution. I mean, I just accept it as part of the playing conditions. It's part of the assumptions. It's part of the challenge. I would deal with it, ideally even leverage it where I can.
Joel Kaplan, the internet was supposed to be borderless, a utopian free space where ideas and thoughts flowed freely. But now there are more and more firewalls being imposed by various regimes. Is that the future we should brace for a fragmented space divided by geopolitical lines?
Well, I don't think that that's a future that we should accept. And I think there are real opportunities, even as we speak, to make progress in ensuring that's not the case. And let me give an example of an area that we're quite focused on, as is the government of India. At the Paris AI Summit a month or so ago, Prime Minister Modi very vocally embraced the idea of open source AI, and that, for a company like ours, that was very gratifying because Meta is going to spend in 2025 something on the order of $60 to $65 billion investing in AI to build foundational models, the most powerful, advanced, performative foundational models, which we will then make available for free to developers around the world to build on top of, to fine tune, to modify, to customize, to apply their local language data sets. And a country that is really thriving in taking advantage of that opportunity is India. And the reason why I think that's important to your question is this is the way in which we can ensure that the shared values of like the great democracies in the world are what is embedded in the technology of the future. Because we know that it's not just American tech companies like Meta that are making these kind of investments and that have the ability to develop these sort of open source technologies in AI. We saw a month or so ago with the release of DeepSeek out of China that the Chinese are fierce competitors in this area, and they understand that this is one of the technological battlefields of the future. And it's really important that the decision be made as to whether there's going to be an open source standard, a global open source standard that emerges. If you think about past technological advances, you had an open source model in Linux and in Android. And I think we can all be grateful that Linux was a Finnish company and Android was out of an American company, and that the American values of openness, or the shared Western values and democratic values of openness and transparency, are embedded in that technology. That's a choice that we get to make. And the regulatory environment that countries like India and the United States decide on will determine whether the future is built on these shared democratic values or on a different alternative that's emanating out of China. I'm really optimistic about what I see when I come to India, and it makes me think we can avoid the kind of future that you described.
I see how China has emerged as a villain, and TikTok is an example of that. The allegation is that TikTok shares data with the Chinese regime, as I'm sure a lot of other Chinese companies do. But here's my issue: American companies do the exact same thing. In the last 10 years, Meta, Apple, and Google handed over data from 3.1 million accounts to the US government. Meta's data sharing is up by 675% in this time. So basically, American companies get away with doing the very same thing by virtue of being American.
I mean, respectfully, that's just not remotely the same thing. Of course, companies like our companies reply to lawful orders to protect people from child sexual exploitation, from sex trafficking, from terrorism. I don't think that's inconsistent with democratic values. I don't think that's what we see in China. And honestly, I'd be surprised if that's a shared view.
Pier Roberto Folgiero, every company is a product of the country it operates in, and that sometimes also creates an uneven playing field. You mentioned shipbuilding. China is set to give around $15 billion every year in subsidies, and I'm not even counting the steel subsidies, which is a significant and important component. Now, Western governments and companies are investigating this unfair practice. would you say they were caught napping at the wheel? It's been happening for many, many years.
But again, first of all, let me tell you that I'm very happy to participate to this panel because I'm the only hardware guy. Because now it's time for software, code, writing. But you know, in order to host software, you need hardware producer. So let me play the game of the heavy industry around the table. Let me say that in this new geopolitical landscape, we need to go for a kind of reindustrialization. That's what is expected to happen in Western countries. So shortening certain supply chain and go back to production. And we have to tell young people that production is a beautiful job. In the old times, if you're not good at school, you will go to the shipyard. Now we have to tell even our brilliant young people that production is back. And you need to go and cope with hardware, not only software. So that's the game I'm gonna play. So this is very important. Obviously, we need to modernize shipbuilding.
Yeah.
So in order to be attractive and in order to reindustrialize Western countries, we need to offer a job that is as robotized as possible, as automated as possible. That's what we are doing in our shipyard. So yes, you need tariff in order to protect yourself, but at the same time, you need to reindustrialize yourself. And again, it comes from the culture of young people. It starts from there. Then it's a matter of rethinking industrial processes, injecting as much as new technologies as possible. Again, in terms of manufacturing, in terms of, robotization. Basically, we have to implement in the shipbuilding something similar to what happened in the automotive sectors 20 years ago, 30 years ago. Obviously, mutatis mutandis, because there are a lot of, we work in open field, so we don't work in chains, but there is a lot to do, So I wouldn't put not only the accent on the regulatory framework, I would like also to put the accent on the reindustrialization, from the culture of young people all the way to the processes, all the way to manufacturing scheme. And I believe in this respect, India can play a very important role. Simply because in this renaissance of shipbuilding, India can start from engineering capabilities, coping engineering capabilities, and coupling, engineering capabilities with manufacturing of components, so supply chain, fabrication and manufacturing of key systems that need to be installed in a ship, and third, availability of labor. So it's very rare to have these three massive skills in the same geography, and on top of it, there is a big domestic demand. So these existing condition precedents are associated with a domestic demand. And I believe that this is a long journey because, again, heavy industry is not software. So you need to be, slow biorhythms. That's the name of the game. But it's a process that is starting. And we are more than happy being the biggest Western shipbuilder. We are more than happy to get along with this renaissance of shipbuilding and putting our technological expertise, because again, the ship of the future is not a hull made of steel, it's a system of systems. That's the concept of technological ships. So we are more than happy to take all these historical roots of the country and associate with our geopolitical bloc expertise and joining forces.
Right. Mariana Demar, Russia and China are said to be exploring alternatives to SWIFT, and that is 24% of the global economy breaking away from your network. Do you think they can mount an effective challenge to SWIFT? Also, SWIFT was envisioned as part of a global financial infrastructure, and that was underpinned by a globalist US and the near monopoly of the dollar, both of which cannot be assured anymore in the given circumstances. So, do you think that they have a future, or do you think that the world will explore alternatives?
Yeah, thanks. It's a very important question. Thank you. Well, actually, it's what I was saying. I mean, you have geopolitical on one side, you have technological innovations on the other side. For instance, central bank digital currencies, or a new way of moving value across the board. So you have different factors that drive fragmentation. Fragmentation meaning, indeed, I mean, some financial systems that may at some point be completely disconnected. And that will happen. I mean, it's already happening. And that's a fact of life, I would say. But what is our view is that, global trade over the past has been a fundamental driver of growth. And how has it been? Because of and thanks to the integrated financial system we have built all together. So a secure, trusted, a really reliable, but also connected and interoperable, as I said, the arteries and backbones of the financial economy. So our role in this will be, and due to the fact that fragmentation hurts badly the global economy, our role will be to maintain the glue of the ecosystem. Okay, we are interconnecting the financial ecosystem. We want to continue to do it with potentially these systems that, okay, there may be there's the Russian system, there's the Chinese system, which is not a competitor, by the way. It's just relying on SWIFT for the international part of the RMB. But there will be other platforms like central bank digital currencies. How do you want a business to send payment to another business or another person in a country with a central bank digital currency, which is natively created, but we're not connected? So our role will be to make sure that we interconnect to the different systems, if the systems want it, and to ensure that the global trade, global flows continue to happen, and that we support global growth. So that will be important in the future, indeed.
Right. Dr. Jaishankar, how do you see the weaponization of things that were intended to be global goods, like SWIFT or social media or telecom? Do you think that undermines trust in these institutions? And does it push India then to explore alternatives, perhaps homegrown ones?
Well, there are different ways of dealing with weaponization. One is to stay on the right side of the weapon. So, you don't get hit, others do. But look, here's the reality. The world today makes business decisions, factoring in national security in a manner in which it did not do so before, especially in the digital era. And two of them here, in fact, all of them here, in some way are deeply involved in that. In the digital era, I think it's not just about cost. It is about comfort. It is about trust. So if you are today looking at this serious, at a strategic level, the business conversations, you keep hearing resilience, reliability, trust, transparency. So you want to do business more and more with those with whom you are secure. And your earlier point that everybody has, every partner offers some risks. Yes, but you would rather take the risks with those where your interests are not contradictory, then the risks are not that great, rather than those with whom your interests could clash or do clash. So I would argue today that countries in a way need a kind of a macro business strategy. And certainly, when you look at India, when we look at the world today, we see, we are involved right now in 3 big trade negotiations with the EU, with the UK, and now with the United States. These are our growth markets. These are our technology partners. This is where people go for education. This is where people go for tourism. These are in many ways our connectivity partners. They are our strategic partners. So when we make choices, it's no longer just efficiency and cost. I think there are economic factors which I think increasingly influence business decisions. Sometimes you can be put in a situation where we say, let me devise something alternative because that is a compulsion of the day. But I would argue that's an aberration rather than than some kind of strategic desire to replace a particular system. I mean, if we can make the current system work for us, it's the smarter thing to do.
Right. Before I open it to the audience, I want to ask you one last question, and this is something that we've discussed internally as well. You see, foreign policy was designed to deal with countries, but today companies are sometimes more powerful than countries. For instance, you have Elon Musk and Starlink. With one flip of the switch, they can change the course of the war in Ukraine. Do you think foreign policy then needs to evolve, or do you leave it to regulators and financial institutions?
No, one, historically, that's not entirely the case. I would remind you of a company called East India Company, which became so big. But it's a valid point. I mean, the market cap of many companies today would probably entitle some of them, I don't know, maybe even to be part of the G20. So this is, again, a reality we have to deal with. So sometimes, you deal with them in tandem with the government. Sometimes you deal with them directly, but you have to deal with them. I mean, this is the necessity in my business.
Right. We'll open it to the audience. We can take a couple of questions, I suppose.
Ma'am, here.
Ma'am. Ma'am, this
gets
side. The mic.
Ma'am,
this side.
Greetings. I am Bhavna here at the left side.
Yes.
Yes. My question is to Dr. S. Jaishankar, sir. Sir, as economic warfare reshapes global power structure, how is India leveraging its diplomatic and economic strengths to not only mitigate these strategies and pressures, but also emerge as a key architect of a more balanced and a resilient global order? Thank you.
In a way, I had addressed some of that, which is we have global interest today. If you look at our key trade partners, they're spread all over the world. They are very diverse. So just like we have a way of working with different countries politically, we obviously do the same economically. But again, I stress that all countries are not the same. And the digital era will bring out that differential more sharply. At the end of the day, it does matter where our data goes. Who looks at our data, who processes it, who develops the AI based on our data. We can't be agnostic in the digital era. So it's not the same as the manufacturing era. In the manufacturing era, beyond a point, it didn't matter where the product came from. You can't extrapolate that proposition into the digital era. So I would argue that the answer to your question would be like portfolio management. You diversify it as much as you can, but at the end of the day, there will be comforts, there will be the reliability factor, there will be issues of trust. And that is why some of these FTAs we are engaged with today with the EU, with UK, USA matter so much.
Greetings, Dr. Jaishankar. Over here, towards right. Over here. Hello, my name is Shreyas. I work as a business analyst at Deloitte, and I have a question to you, Dr. Jaishankar. Considering the fact that United States is pulling out of organizations like WHO, Paris Agreement, do you think they're trying to establish a new world order? And if yes, what role can India play in being the leader of Global South?
I think if your question is what the US is doing, you should ask the Americans, not me. If you ask me what we should be doing, I mean, we should be doing many things, including engaging the Americans and engaging the Global South. You know, our strategy is pretty, I mean, it's been discussed in other sessions, it's pretty obvious. But our effort is really to really maximize our options to, since I'm on a business panel, to increase our turnover, to improve our technology. And, you know, we are on a strong growth trajectory. And as a business, you know, as a country which has decades of growth ahead, that's what we should be planning for. Now, different countries will make decisions, you know, that's their prerogative. We have to factor it in while making our calculations. I can't tell some other country that don't do this because it's not convenient to me. That's their call, not mine.
Thank you. We'll take one question from the Raisina Young Fellows. Yes, yes, and for the rest of the panel as well.
Okay. I'm from China and I'm working for a European think tank. I have one question for Mr. Kaplan. So Meta CEO like Mark Zuckerberg has reportedly shown interest in assessing the Chinese market for many years. And what makes news headlines lately is that in 2015, the company developed a system that would accommodate Chinese content regulations, including features to restrict certain content and potentially share user data. Does this mean that for global tech companies like Meta, the stated democratic value and user privacy could be compromised for market access? Thank you.
Thanks for the question. So Mark was pretty clear for a number of years, probably starting about a decade ago, that for a company whose mission was to connect the world, you couldn't really accomplish that mission and leave out a country with over 1 billion people. And so he was very interested in being able to offer our services in China. And we did spend a couple of years discussing with the Chinese government what it would take for us to be allowed to offer our services. And as Mark explained in a speech at Georgetown University in 2019, we ultimately were not able to come to agreement in doing the things that would be necessary for us to offer our services in China, the things that are demanded of companies that do offer their services in China, you know, many of which are sort of well-known household names. And what Mark said in 2019 is that actually freed us up to be less encumbered in defending and talking about freedom of expression. And so at the end of the day, that's a better position for us to be in, one where we can continue to defend and talk about the values that Facebook was founded on and its roots in free expression.
Dr. Jaishankar, I represent the financial investors worldwide.
We wanted the Raisina Young Fellows, or do we wrap?
Just a last question, ma'am.
Ma'am,
We have 30 seconds. We'll take one student, please. Thank you.
Thank you very much for your insights. The panel has established.
You have to be louder. Oh, come closer to the mic.
It's better? Okay. Thank you very much for your insights. The panel has established the close relation between innovation, competitiveness, and national security. A cornerstone connecting all that is national data, which for innovation needs to be leveraged in the cloud, but for national security needs to be protected as good as possible. Hosting such data on a cloud on foreign hyperscalers appears to make nations at least a bit prone to geopolitical threats. So I was wondering, how does the Indian government plan to expand state security in the digital realm? Or put it differently, how do you define digital sovereignty in the current geopolitical context? Thank you. I'm guessing it's for you.
Well, look, I think people realize today the value of data. And yes, ideally, there's business or innovation at a global level, which looks again very neutral. But the reality, is very different. There is national competition in a way. There are businesses which profit from access to data. So I think India must play to its strength. And what are its strengths? A huge amount of data because there's a large population, an enormously diverse society. So even within those numbers, you get actually a great, very wide spectrum of data and innovation culture. So we have to make the most of it. And at the end of the day, both as a commissar and potentially as a capitalist, I would say I'm in it for me. I would max it for myself. I'm not here to develop global business. I'm here to develop Indian business.
Ma'am, can I last
I think that's a good note to end on. The time's up. Thank you very much. Thank you all for your thoughts, and thank you for being such a wonderful audience. Thank you. Good morning. Namaskar. There's a running joke in the news media that Elon Musk is the co-president of the United States. It is not true, but it is relevant to our session and our discussion because we are talking about the intersection between governments and businesses and how they shape our world. We are in the middle of a major geopolitical realignment, and corporate entities play a crucial role here. You see Western companies banding up with Western governments. You see Chinese companies banding up with the Chinese regime. So it's not just country versus country anymore. It is a country plus its companies versus others. And this is not necessarily new. You may have heard of a certain East India company and you know how that played out. But in today's context, how will this new equation impact big power play and big power rivalries? That's what we'll discuss. We have a crack panel here. Good morning to all of you. Joel Kaplan, let me start with you. The US administration, the new US administration, prefers fewer social media regulations, even when it comes to fact checks. And companies like Meta have responded to this by ending third-party fact checking. But in Europe, social media regulation is a top priority. So is that going to be the future of platforms like Meta, where you don't have a uniform policy or principle, you just operate or respond to the country that you're operating in?
Well, first of all, Palki, thank you for having me on the panel. It's an honor to be here with the Honorable Minister and the other august guests. I mean, there is obviously been a change in administration in Washington, and I would say the Trump administration does have a very different orientation towards social media companies, but towards American companies and American tech in particular than the prior administration did. And while it's true that President Trump and his administration are much more interested in expanding the freedom of expression online than the prior administration was, I actually think that the bigger change, at least that we're experiencing as a company and as a sector, is that we have an administration in Washington that is interested in promoting American technology, advancing Western values in technology, and honestly defending American tech companies against what they perceive to be a discriminatory regulation targeted at them. That's something we've seen particularly in the EU over the last number of years, and I think it is a change, and one that we're experiencing and are candidly quite pleased about, to have an administration that's prepared to defend American values online and American companies again against what we and they perceive to be unfair targeting. When it comes to the changes that we've made recently around fact checking, we found that we know that people don't want to see misinformation on our platforms. It's not good for us. It's not good for them. But the system that we had put in place a number of years ago to deal with a third-party fact-checking program just proved to be too prone to political and partisan bias, and had destroyed at least as much trust and credibility as it had built. And so we decided to replace that system with another approach that leverages the many different voices and people and diverse perspectives on our platform, a system called Community Notes, which is sort of like, you can imagine, think about Wikipedia, and think about the way other platforms have relied on community-based systems to provide more context and more information. We think that's going to be really promising.
But will you stick to that even in countries where there's a repressive regime or stifling of free speech or human rights?
Well, we're starting it in the United States. It's rolling out in the next couple of weeks. We're going to take our time to make sure that we understand how it's working and that we get it right. And then we'll look to expand to other countries. And of course, we'll take into consideration the different information ecosystems and news ecosystems that exist in different markets and different countries. And we'll make sure that we do it deliberately and carefully.
Pierroberto Folgiero, protectionism clearly is creeping up across the world, with the US becoming the unexpected flag bearer of it. How much of an impact will these trade and tariff barriers / wars have on trade volume and global trade?
Good morning, everyone, and thank you for this invitation, and I'm very honored to be at the same panel with the minister. But let me say that what we are living is the geopolitics of shipbuilding. We are shipbuilders. We build ships in 5 continents, but all of a sudden the world realized the geopolitical power of shipbuilding. Western countries abandoned shipbuilding something like 20 years ago. So the vast majority of ships in terms of tonnage are built in between China and Korea. So all Western countries are rethinking the strategic importance of this industry. US, first of all, and China is somehow having a long-term view on the importance of the maritime economy, starting from shipbuilding as a building block, moving to logistic business, all the way to owning port infrastructure. Now it's time to rebalance all this. What remains in Western countries is technology-driven shipbuilding. So those kind of ships in which the payload is making the difference. So when the cost of a ship is driven by cost of the steel, cost of the labor, and cost of the energy, it was lost. When these 3 components accounts for 80%, is lost. When the payload is the most important part of the total, then we can be still relevant. So this is this new era. We believe that this know-how in technology-driven shipbuilding is the way to think of the future shipbuilding. So that's why we are very interested in joining forces through a common geopolitical platform, but joining forces in order to go for a kind of renaissance of shipbuilding in a way that is instrumental to this new geopolitical order. So this is our focus, and we believe this is the way ahead.
I'll come to shipbuilding in particular in a bit. Let me get Marianne Dimarchi in the conversation. SWIFT describes itself as a neutral entity with a global character. So I would say this model is based on trust and consistency. Yet SWIFT has become a tool of Western foreign policy, as seen in the war in Ukraine with Russian banks being cut off. Would you say that undermines your claims of neutrality?
Well, thank you. Good morning to all, and thanks for your question. Well, indeed, I mean, SWIFT is a global cooperative. We are headquartered in Belgium, so under EU law, but we are present in more than 200 countries. We are connecting the world, the economic and financial world, actually, through more than 11,500 financial institutions all across the world, including, of course, in India. And we are also completely currency agnostic, supporting, 150 currencies and so forth. So this is our global nature. We are really keen on being seen as a digital infrastructure, as a public good. Indeed, I mean, we are so based in Europe. There has been sanctions imposed on us and other companies, which we had to apply. But we are really committed to, maintain and to show to the world our global nature. We are evolving also our corporate governance to make it more inclusive. And we are, as I said, I mean, we are here, we are a non-profit company. Okay, and as a non-profit company, we're not maximizing on revenue. What we are maximizing on is to ensure that we maximize the value of what we offer to the global ecosystem. We are here to try to resolve some complex challenges, so building the future of tomorrow or the future of finance of tomorrow. Given what you just said, I mean, geopolitical tensions, the global growth of digitization, embracement of digitization, which all these can have pros and cons, but can also increase fragmentation.
But can you still claim to be neutral, was my question.
Yeah, we are. I mean, we are a neutral company, but we have to be headquartered somewhere. And, so we are incorporated in Europe. It's all the banks in the world have decided, it was 100 banks at the time, now it's 11,500, have decided to incorporate this organization in Europe, and we have to follow European law. But as a company, we have a board which is very representative of many different regions. We are evolving that corporate governance to be even more neutral and representative of all parts of the world. We are present in all the world. And what is really important, it's not necessarily this part, if I may. What is important is that we really need in these geopolitical tensions, new proliferation of payment systems here and there, be it instant payment systems, central bank digital currencies, other systems that want to be built, fine. I mean, it's good and it gives opportunity. But if they are not connected and interoperable, you risk financial fragmentation. And financial fragmentation is really impacting global growth. There's many research. The last one is from the Economist that has measured that if financial fragmentation, and I will come back on that to explain why, financial fragmentation can hit the global growth, global GDP, up to 6% of GDP in 2030, if fragmentation accelerates. 280 million jobs would not materialize because of this, and no single country would benefit from it, in particular those that rely on financial flows. And why is that? Because we need to realize that the economy is not just policies and stuff. It's just, also pipelines,
Right.
systems that are interconnected, that are the backbone of the economy, the arteries of economy. And if this is not functioning well, the economy suffers.
Right. I would have asked you, Dr. Jaishankar, if we'll help SWIFT find a new headquarters. But on a more serious note, I want to ask you, historically, India has shied away from weaponizing trade and financial institutions. And you yourself have said that we are not in favor of national sanctions. But with the way the landscape is changing, and you've heard all the other players speak, do you think that trade barriers and tariffs and tech sanctions or tech restrictions have a place in our foreign policy, or should have a place in our foreign policy?
Before I come to that, I just want to say, I can see there are really three capitalists sitting on this side, but I'm impressed to be seen as a commissar. It's a term from my youth, and I was quite amused to see it being used in this age, but I take it as a compliment. Now, your point, tariffs, sanctions, what's happening, export controls. I think whether we would like it or not, they are a reality. Countries use them. In fact, if one looks at the last decade, I would say we have seen a much greater weaponization of pretty much any kind of capability or any kind of economic activity. It could be financial flows, it could be energy supplies, it could be technology. This is the reality of the world. So since I take the world as it is, we have to negotiate our way through that and see, how best we can do for our own country. Because at the end of the day, for a government, for a commissar of the government, you fight for your business. You fight for your business because you're fighting for your employment. You're fighting for your comprehensive national power, of which business makes a very important contribution. And I think today the lines, dividing different domains have eroded. And I think overall, if you see in international relations, I think it's a less restrained culture today than it was, say, a decade ago. And that's something we all need to factor in.
Does it bother you, the blurring lines?
I'm not, I wouldn't say it would bother me because I've seen its evolution. I mean, I just accept it as part of the playing conditions. So it's part of the assumptions. It's part of the challenge. And I would deal with it, ideally even leverage it where I can.
Joel Kaplan, the internet was supposed to be borderless, a utopian free space where ideas and thoughts flowed freely. But now there are more and more firewalls being imposed by various regimes. Is that the future we should brace for a fragmented space divided by geopolitical lines?
Well, I don't think that that's a future that we should accept, and I think there are real opportunities even as we speak to make progress in ensuring that's not the case. And let me give an example of an area that we're quite focused on, as is the government of India. At the Paris AI Summit a month or so ago, Prime Minister Modi very vocally embraced the idea of open source AI, and that for a company like ours, that was very gratifying because Meta is going to spend in 2025 something on the order of $60 to $65 billion investing in AI to build foundational models, the most powerful, advanced, performative foundational models, which we will then make available for free to developers around the world to build on top of, to fine tune, to modify, to customize, to apply their local language data sets And a country that is really thriving in taking advantage of that opportunity is India. And the reason why I think that's important to your question is this is the way in which we can ensure that the shared values of like the great democracies in the world are what is embedded in the technology of the future. Because we know that it's not just American tech companies like Meta that are making these kind of investments and that have the ability to develop these sort of open source technologies in AI. We saw a month or so ago with the release of DeepSeek out of China that the Chinese are fierce competitors in this area, and they understand that this is one of the technological battlefields of the future. And it's really important that the decision be made as to whether there's going to be an open source standard, a global open source standard that emerges. If you think about past technological advances, you had an open source model in Linux and in Android. And I think we can all be grateful that Linux was a Finnish company and Android was out of an American company, and that the American values of openness, or the shared Western values and democratic values of openness and transparency are embedded in that technology. That's a choice that we get to make. And the regulatory environment that countries like India and the United States decide on will determine whether the future is built on these shared democratic values or on a different alternative that's emanating out of China. I'm really optimistic about what I see when I come to India, and it makes me think we can avoid the kind of future that you described.
I see how China has emerged as a villain, and TikTok is an example of that. The allegation is that TikTok shares data with the Chinese regime, as I'm sure a lot of other Chinese companies do. But here's my issue: American companies do the exact same thing. In the last 10 years, Meta, Apple, and Google handed over data from 3.1 million accounts to the US government. Meta's data sharing is up by 675% in this time. So basically, American companies get away with doing the very same thing by virtue of being American.
I mean, respectfully, that's just not remotely the same thing. Of course, companies like our companies reply to lawful orders to protect people from child sexual exploitation, from sex trafficking, from terrorism. I don't think that's inconsistent with democratic values. I don't think that's what we see in China. And honestly, I'd be surprised if that's a shared view.
Pier Roberto Folgiero, every company is a product of the country it operates in, and that sometimes also creates an uneven playing field. You mentioned shipbuilding. China is set to give around $15 billion every year in subsidies, and I'm not even counting the steel subsidies, which is a significant and important component. Now, Western governments and companies are investigating this unfair practice. Would you say they were caught napping at the wheel? It's been happening for many, many years.
But again, first of all, let me tell you that I'm very happy to participate to this panel because I'm the only hardware guy. Because now it's time for software code writing. But in order to host software, you need hardware producer. So let me play the game of the heavy industry around the table. Let me say that in this new geopolitical landscape, we need to go for a kind of reindustrialization. That's what is expected to happen in Western countries. So shortening certain supply chain and go back to production. And we have to tell young people that production is a beautiful job. In the old times, if you're not good at school, you will go to the shipyard. Now we have to tell even our brilliant young people that production is back, and you need to go and cope with hardware, not only software. So that's the game I'm gonna play. So this is very important. Obviously, we need to modernize shipbuilding.
Yeah.
So in order to be attractive and in order to reindustrialize Western countries, we need to offer a job that is as robotized as possible, as automated as possible. That's what we are doing in our shipyard. So yes, you need tariff in order to protect yourself, but at the same time, you need to reindustrialize yourself. And again, it comes from the culture of young people. It starts from there. Then it's a matter of rethinking industrial processes, injecting as much as new technologies as possible. Again, in terms of manufacturing, in terms of, robotization. Basically, we have to implement in the shipbuilding something similar to what happened in the automotive sectors 20 years ago, 30 years ago. Obviously, mutatis mutandis, because there are a lot of, we work in open field, so we don't work in chains, but there is a lot to do. So I wouldn't put not only the accent on the regulatory framework, I would like also to put the accent on the reindustrialization, from the culture of young people all the way to the processes, all the way to manufacturing scheme. And I believe in this respect, India can play a very important role, simply because in this renaissance of shipbuilding, India can start from engineering capabilities, coping engineering capabilities, and coupling, engineering capabilities with manufacturing of components, so supply chain, fabrication and manufacturing of key systems that need to be installed in ship, and third, availability of labor. So it's very rare to have these three massive skills in the same geography, and on top of it, there is a big domestic demand. So these existing condition precedents are associated with a domestic demand. And I believe that this is a long journey, because again, heavy industry is not software. So you need to be, slow biorhythms. That's the name of the game. But it's a process that is starting. And we are more than happy being the biggest Western shipbuilder. We are more than happy to get along with this renaissance of shipbuilding and putting our technological expertise, because again, the ship of the future is not a hull made of steel, it's a system of systems. That's the concept of technological ships. So we are more than happy to take all these historical roots of the country and associate with our geopolitical bloc expertise and joining forces.
Right. Mariana Demar, Russia and China are said to be exploring alternatives to SWIFT, and that is 24% of the global economy breaking away from your network. Do you think they can mount an effective challenge to SWIFT? Also, SWIFT was envisioned as part of a global financial infrastructure, and that was underpinned by a globalist US and the near monopoly of the dollar, both of which cannot be assured anymore in the given circumstances. So do you think that they have a future, or do you think that the world will explore alternatives?
Yeah, thanks. It's a very important question. Thank you. Well, actually, is what I was saying. I mean, you have geopolitical on one side, you have technological innovations on the other side. For instance, central bank digital currencies, or a new way of moving value across the board. So you have different factors that drive fragmentation. Fragmentation meaning, indeed, I mean, some financial systems that may at some point be completely disconnected. And that will happen. I mean, it's already happening. And that's a fact of life, I would say. But what is our view is that, global trade over the past has been a fundamental driver of growth. And how has it been? Because of and thanks to the integrated financial system we have built all together. So a secure, trusted, a really reliable, but also connected and interoperable, as I said, the arteries and backbones of the financial economy. So our role in this will be, and due to the fact that fragmentation hurts badly the global economy. Our role will be to maintain the glue of the ecosystem. Okay, we are interconnecting the financial ecosystem. We want to continue to do it with potentially these systems that, okay, there may be there's the Russian system, there's the Chinese system, which is not a competitor, by the way. It's just relying on SWIFT for the international part of the RMB. But there will be other platforms like central bank digital currencies. How do you want to a business to send payment to another business or another person in a country with a central bank digital currency, which is natively created, but we're not connected? So our role will be to make sure that we interconnect to the different systems, if the systems want it, and to ensure that the global trade, global flows continue to happen, and that we support global growth. So that will be important in the future, indeed.
Right. Dr. Jaishankar, how do you see the weaponization of things that were intended to be global goods, like SWIFT or social media or telecom? Do you think that undermines trust in these institutions? And does it push India then to explore alternatives, perhaps homegrown ones?
Well, there are different ways of dealing with weaponization. One is to stay on the right side of the weapon. So, you don't get hit, others do. But here's the reality. The world today makes business decisions, factoring in national security in a manner in which it did not do so before, especially in the digital era. And two of them here, in fact, all of them here, in some way are deeply involved in that. In the digital era, I think it's not just about cost, it is about comfort, it is about trust. So if you are today looking at this serious, at a strategic level, the business conversations, you keep hearing resilience, reliability, trust, transparency. So you want to do business more and more with those with whom you are secure. And your earlier point that everybody has, every partner offers some risks. Yes, but you would rather take the risks with those where your interests are not contradictory, then the risks are not that great, rather than those with whom your interests could clash or do clash. So I would argue today that countries in a way need a kind of a macro business strategy. And certainly, when you look at India, when we look at the world today, we see, we are involved right now in three big trade negotiations with the EU, with the UK, and now with the United States. These are our growth markets. These are our technology partners. This is where people go for education. This is where people go for tourism. These are in many ways our connectivity partners. They are our strategic partners. So when we make choices, it's no longer just efficiency and cost. I think there are economic factors which I think increasingly influence business decisions. Sometimes you can be put in a situation where we say, let me devise something alternative because that is a compulsion of the day. But I would argue that's an aberration rather than than some kind of strategic desire to replace a particular system. I mean, if we can make the current system work for us, it's the smarter thing to do.
Right. Before I open it to the audience, I want to ask you one last question, and this is something that we've discussed internally as well. You see, foreign policy was designed to deal with countries, but today companies are sometimes more powerful than countries. For instance, you have Elon Musk and Starlink. With one flip of the switch, they can change the course of the war in Ukraine. Do you think foreign policy then needs to evolve, or do you leave it to regulators and financial institutions?
No, one, historically, that's not entirely the case. I would remind you of a company called East India Company, which became so big. But it's a valid point. I mean, the market cap of many companies today would probably entitle some of them, I don't know, maybe even to be part of the G20. This is, again, a reality we have to deal with. So sometimes, you deal with them in tandem with the government. Sometimes you deal with them directly, but you have to deal with them. I mean, this is the necessity in my business.
Right. We'll open it to the audience. We can take a couple of questions, I suppose.
Ma'am, here.
Ma'am,
Ma'am, this side. The mic.
Ma'am, this side.
Greetings. I am Bhavna, here at the left side.
Yes.
My question is to Dr. S. Jaishankar, sir. Sir, as economic warfare reshapes global power structure, how is India leveraging its diplomatic and economic strengths to not only mitigate these strategies and pressures, but also emerge as a key architect of a more balanced and a resilient global order? Thank you.
In a way, I had addressed some of that, which is we have global interest today. If you look at our key trade partners, they're spread all over the world. They are very diverse. So just like we have a way of working with different countries politically, we obviously do the same economically. But again, I stress that all countries are not the same. And the digital era will bring out that differential more sharply. At the end of the day, it does matter where our data goes. Who looks at our data, who processes it, who develops the AI based on our data. We can't be agnostic in the digital era. So it's not the same as the manufacturing era. In the manufacturing era, beyond a point, it didn't matter where the product came from. You can't extrapolate that proposition into the digital era. So I would argue that the answer to your question would be like portfolio management. You diversify it as much as you can, but at the end of the day, there will be comforts, there will be the reliability factor, there will be issues of trust. And that is why some of these FTAs we are engaged with today with the EU, with UK, USA matter so much.
Greetings, Dr. Jaishankar. Over here, towards right. Towards right. Over here. Hello, my name is Shreyas. I work as a business analyst at Deloitte, and I have a question to you, Dr. Jaishankar. Considering the fact that United States is